Hi, good morning everybody, and welcome to the session on financial intermediaries and credit risk. So first of all, just a few words to explain. You may have registered for the credit risk session. We actually, when we were pulling together the content, decided it made much more sense to put the two sessions together because so many of the topics overlap. So that's why you're finding yourself in this joint combined session. So I hope you all had a nice evening last night. You're feeling recharged and you're ready for day 3. So what are we here to talk about this morning? So we'd like to really understand with our esteemed members of the panel how we can better leverage the expertise and the resources of financial intermediaries. We'd like to understand what are the opportunities and barriers for increasing financial intermediaries' participation in our financial instruments. And we'd also like to delve into the topic of risk to understand how we can manage risk to make it more attractive for financial intermediaries to work with us. So, to start us off, we've got a presentation from Iveta from DG Regio. So Iveta will just talk us through the role and the importance of financial intermediaries for the Commission, and then we'll get into a panel discussion. But first of all, I invite Iveta to join us. Thank you, Iveta.
Good morning, ladies and gentlemen. For some of us, quite early morning, but let's start. I'm pleased to be here today and speak about financial intermediaries and their really crucial added value they bring to cohesion policy. So let's start. First and foremost, financial intermediaries bring expertise that enhances the quality of projects and on investment decisions. The second thing, which is extremely important, they attract private capital, and their involvement leverages private investments, and we can co-finance our projects. And so we can say that it mobilized private funding resources and save our public budgets. And this is important also for the future because we believe they can maintain also this support even in future decades when allocations to cohesion policy will inevitably shrink. And they are generating reflows through their investment decisions, and at the same time they can very effectively manage those reflows. Additionally, they can reduce administrative burden on final recipients, which means that projects proceed fluently, smoothly, without excessive paperwork. They are also, and this is quite interesting, independent from governmental changes. So basically they can maintain their operations and objectives regardless changes in government decisions and leadership. And this stability maintain also a high level of long-term investment, and those long-term investment are not disrupted by those political changes. And last but not least, they ensure also that market-based approach to regional development remains steady and reliable. Now, when we observe involvement of financial intermediaries in this framework and cooperation with them, we can observe some kind of win-win situation where banks, managing authorities, and also project promoters can benefit. So first, for banks, when they can work within this well-managed financial instrument, this means for them growth. This means business growth, and at the same time, financial intermediaries encourage banks to explore, to enter new policy areas and take on much more risk. For managing authorities, thanks to financial intermediaries, they are receiving very important support for their projects, and those projects are aimed at public good improvement. This is very important. And again, leveraging private capital multiplies even more impact of our public funds. And the last group are project promoters. So financial intermediaries in cooperation with them means much easier access to finance And also they are gaining a lot of know-how, a lot of support for projects, so we can have really high quality outcomes that at the end of the day benefit all our communities and European regions. Okay, when it comes to implementation of financial instruments, we can see that we really primarily rely on the national promotional banks and institutions because they handle approximately 83% of financial instruments. The data is from the programming period 2014 and 20. Then 7% is handled by European Investment Fund. Here we are talking mostly about guarantees and equity instruments. And roughly 4% is handled by European Investment Bank, and they are focusing on lending, so we are talking about loans here. And the remaining ratio of 6%, so those are financial instruments implemented either directly or by other organizations, like, for example, some specific associations managing social funds. But as we can see, national promotional banks are very important, play a crucial role in implementation of financial instruments. Under ERDF, we rely on them. They have really very good understanding of regional, of local needs, and they can address very specific and concrete challenges. And due to their unique status, they use public funds also for financing and stimulate long-term projects in neglected areas. They focus, for example, on social or environmental challenges. And finally, I would like to talk about financial intermediaries and compare them to bridges, because we believe they act as bridges. They are able to support many European regions across different sectors, for instance, SMEs, startups. They also are bringing private capital and creating a good environment for and are building a very good relationships between stakeholders. They are fostering trust there, and they are acting as bridges because financial intermediaries are those entities they are in direct interaction. They are facing those direct interactions with final recipients, so they can hear and address their needs and concerns. So in conclusion, we really believe that the cooperation with financial instruments when implementing our EU cohesion policy and when achieving EU cohesion policy goals is strategically vital. And also, as we move forward, we believe that this role is continuing to be very strategic. Thank you very much.
Thank you, Iveta, for setting the scene. Right, so we thought just to make sure everybody was fully awake and raring to go, we would now have a few Slido polls also to find out who we have in the room in terms of the audience. So if we could put up the first Slido poll question. Everybody just take a moment, please, to make sure you're logged in. The QR code there is on the slide, and the code is FEE Campus. That's not the right Slido poll. No. Sorry, guys. No. Okay, great. So please tell us about your role. Are you a managing authority? Are you a financial intermediary or a fund manager? Are you a holding fund or are you other? We've got quite a lot of others with us. Maybe you're a consultant or you work for another form of public administration. Okay. Can we have the next poll question, please? So as we said at the beginning, we're trying to understand in this session what is the value added of financial intermediaries. So we'd like to hear from you in terms of what you consider to be the most important attribute of a good financial intermediary. So is it that they are a skilled and experienced team, they bring standard market practice and they make sound investment decisions, they bring and attract private sector co-financing and leverage, they have in-depth market knowledge and wide distribution, or perhaps it's all of the above, but you don't have that option. So you have to pick. Okay, it's good, it's a fairly even spread. Can we have the next question then, please? So, delving a little bit deeper now, trying to understand if you have completed or are in the process of undertaking a financial intermediary selection process. How easy was it for you to attract a suitable financial intermediary with the necessary expertise and coverage for your instrument? So was it very easy? So do you have a good market of established intermediaries available to you? Is it moderate? Do you feel like you have some intermediaries, but it really is a developing area and you need to do more to encourage more participants? Or was it very difficult? So much more needs to be done to build a financial intermediary network. Okay, we're fairly evenly spread there. It's quite interesting. Give you another moment. Okay, great. Thank you very much, everybody. All right, so we've heard from you, so now it's time to hear from our other panellists. So I would very much like to now introduce Annaleli Utsmies from Credex, who will talk to us specifically about credit risk. And Annaleli has to leave at 10 o'clock, so we will take some of the credit risk specific questions a little bit earlier. Then we have Kirill Velechikov from KBC from Bulgaria. We have Adam Hinry from BNP Paribas. We have Carlos Meunier Pineda from BPI. And we have David Galida Paratese from CDP and Iveta, who you have already met. So we have a great panel of speakers who have all got a varied range of experience and expertise with managing and developing financial instruments. So I'm going to sit down and then I'll start with the questions. Great, brilliant. So the first round of questions is around financial attractiveness and credit risk. And my first question is to CDP. So we would like to understand, please, how can we best structure a financial instrument for it to be attractive for the market?
Okay, yes. Good morning, everybody. Let me start by saying that GDP is a very peculiar animal. As an MPBI, National Promotional Bank and institution, we're in between private actors and public actors, if we so want. When it comes to making financial instruments attractive for the market, I would say, maybe it sounds too obvious, but ask the market itself. And let me clarify this point. We've been, as GDP, we were created in 1870, so it's been roughly 150 years that we've been doing what we do. And our historical business has always been supporting public administrations. We started by issuing loans to public administrations, and we morphed into what we do today. And when it comes to managing public resources, we support state, regional, and local public administrations. So in this case, managing authorities of structural investment funds in three ways. We help them navigate the complex EU regulations, because this is the first point. At least for us, and I understand also for financial intermediaries, because rules are not always as clear as they seem. We help them understand what the best financial instrument for their policy goal is, because most of the times managing authorities need support, and we bring private actors in and we help them structure these financial products. And lastly, we support them with drafting and setting up implementation and monitoring plans for the deployment of financial resources. So I would say the key point, in my opinion, is rely on the expertise of those actors that are going to invest or use the resources that you allocate them. And to, beyond this, I would say 3 key points beyond the 3 I've already mentioned are, again, from the perspective of managing authorities, adopt as much as possible an umbrella approach where you collaborate with the market. We are mostly responsible for managing the EU mandates under InvestEU, and in that specific field, we have the so-called investment platforms. They are a tool that could possibly be reused also in other situations. So the first point is umbrella approach, one set of rules, clear engagement rules. The second point would be make reporting and let's say conditions for selecting final beneficiaries as easy as possible. I'm talking about eligible versus non-eligible costs. I'm talking about stated treatment, which is a big hurdle sometimes. And finally, but I hope I will have the chance to say more about this later on, focus on risk-taking, risk-sharing and risk-taking capacity for financial intermediaries. And now I will conclude, if private capital is not flowing enough to a specific sector, to a specific industry, that means that it's too risky, and it's the role of governments and the regulator in general to support financial intermediaries in doing so, and you can do this by increasing their risk appetite. So that's my take on this.
Thank you. And have you had difficulties then in attracting financial intermediaries? You were talking about the role of your institution in sort of acting as a bridge between the managing authority and the intermediaries.
Well, of course, at least in Italy, since we've been operating for more than 150 years, managing authorities trust us. We often act as anchor investors. So financial intermediaries are used to working with us, and if we are there, it's easier to attract private resources. But again, what we've seen very often is that even for us, the rules are not necessarily clear enough, and if they're not clear for us, when we play the role of anchor investor, they're not clear for financial intermediaries as well. So
okay, great. Well, we'll come back to some of those topics later on. So Anneli, you have to leave early, as I mentioned. So we're going to jump straight into the more complicated topic of credit risk to test everybody's brains at this early hour. So it's not really a topic we've spent too much time on in the past at V-Compass events. We spoke about it in Vilnius for those of you who were there in November, but we thought it was very relevant, especially when we're talking about energy efficiency as well, to really try and tackle it. So what is the importance of credit risk in the discussions that you have with managing authorities, as holding funds, and with financial intermediaries, when you are designing and setting up a financial instrument? What's your take on that?
Yes, thank you. First of all, I would like to say that CREDEX, where I'm working, is a national promoter institution, so it's crucial, actually, if we're digging into that topic. As you mentioned, yes, there was a deep discussions in November in another V-Compass event in Vilnius. Unfortunately, my colleague was there, and we had a very detailed overview about our risk assessment models. But why we're talking about the risk assessment in energy efficiency measures, for example, if we're giving out a loan, it's important managerial tool, actually, and what we use on a daily basis. And it's important that we can predict the future losses, actually. And it's important to have a close overview about the portfolio that we're holding, because the risk assessment models that we are using is done at the level of transactions and also at the level of portfolio. So, and another point is that the risk assessment is always more conservative than we think about, actually. And the system that we are using in CREDEX is quite detailed, actually, because we have setting up indicator systems, which is quite unique model actually. If we're talking about in other financial intermediaries. And the factors and indicators that we are using are helping us to have an adequate overview in all times. Even if there's a turnover in economy, we would like to know what's going to happen next. It's like a prediction, but not as simple as it seems to be. So, yes.
Okay, thank you. And if we look again at the specific example of energy efficiency, do you think there is a gap then between the perception and the reality of risk?
Yes, it's a tough question. I think that there haven't been any detailed analysis about it, but in my point of view, there are definitely the gap, and due to the financial instruments that we are offering, I think that the gap has been lower. So,
okay,
yes.
So more work to do then, I think, to
Yes,
convince
definitely.
and maybe to educate the market around the risk.
Yes, it's actually a very essential topic to educate all the counterparts who are in this scheme. So the banks and the household associations and etc. These are different counterparts, and we have to reach them. It's not an easy task, as we know.
Great, thank you. So turning to Kirill and KBC and then Bulgaria. So could you maybe explain to us, please, in as simpler terms as possible, how credit risk impacts banking finance activities? So what does it mean in terms of pricing, capital consumption, those types of things? Just pick up the mic. Just talk. Just talk. Just talk. Yeah, like that. Yeah.
Okay. I was thinking, I will answer you how, all these things affect the credit risk, but in fact, I'll share with you how it affected me when I came in the room in the morning.
Oh, wow.
I realized, when seeing faces on the first row and other people, I just realized that I felt almost 10 years younger. And I don't look probably younger, but the reason is that I remember the first FI campus that took part in Brussels almost 10 years ago, and I had to bring our experience on financial instruments. And it's really a great initiative that you do. And going back to your question, KBC Group is a leading Belgian bank insurance group. We have banks in Belgium, Bulgaria, Slovakia, Hungary, and Czech Republic, and we are really very actively using the financial instruments. We use them for private individuals, SME, micro, large corporate clients, and we do also Urban Development Fund, Sustainable Cities Fund. We are partner in this institution, again funded by ERDF. And the question is why we do this, how it helps us. And probably the correct answer is different, and it's how it helps our customers, because this is more important. It helps us to provide to the customers much more cheaper loans with less collaterals for longer terms and for riskier type of deals, for example. And the question for the bank is, this is good, this is our objective, but how we achieve this? It's by affecting the credit risk. This is what the financial instruments actually do. They help us to significantly reduce the credit risk, to increase the speed of recovery of bad loans, to increase not only the speed but also the effectiveness of recovery of bad loans. It helps us to optimize the risk-weighted assets, and this really adds value. So in simple words, it helps banks, but even more, it really adds value to the customers.
Okay. So are you able to find, because of the financial instrument support, are you then able to finance sectors and groups of final recipients that you otherwise wouldn't be able to because of the risk?
Absolutely, this is correct. I could give you the example with innovation project or currently energy efficiency projects with the Urban Development Fund. We elaborated a project addressing the households, single-family buildings and multifamily buildings, some small multifamily buildings, and also dormitories. We finance several student dormitories with this fund. So it really helps to do more outside, a bit outside of our credit policy. And it's crucial for the energy, for the sustainability, for the green transition of our customers. We believe that the financial instruments are the catalyst for the green transition, and they help.
Excellent, thank you. So turning to Adam then and BNP. Adam, so we've heard a little bit about some of the challenges that the colleagues have explained. Could you perhaps tell us a little bit about what type of financial instrument you think is best suited to address some of the market challenges? And also perhaps elaborate on the areas, the sectors that are still too difficult, even with financial instrument support, based on our current toolkit.
Okay. Yes, thank you. So the answer is very simple. We need to provide a clever financial instrument to address all the challenges. I can see not only the credit risk as a problem, I can see the combination of different risks. We can see credit risk, of course, but we can also see a liquidity risk on the bank side. We can see operational, internal risks. And all these three types of risk must be addressed. So in simple words, in order to provide a good instrument, we should focus on uncapped guarantees, not capped but uncapped guarantees, because uncapped guarantees are able to reduce the capital consumption on banks' sides. And the capital is the most expensive source of financing. This is number one. Secondly, uncapped guarantees are able to take off efficiently risk from our books, while capped guarantees are very limited. Secondly, if we think about the cost of final loans to the final beneficiaries, it is of course a function of the cost of risk, the cost of capital, but also the liquidity aspects. And in case banks are not over liquid, they are looking for money, providing some type of financial instruments blended with uncapped guarantees, but also blended with cheaper funding credit lines, it helps a lot. So I can see that the ideal instrument for the bank is the instrument that is connected with the uncapped guarantee and credit line. And the third aspect is operational risk. We don't talk much, I think, about the operational internal risk, but the problem I can see after implementation several instruments in the past is that in some cases the requirements are so difficult to be met, and we have a problem of interpretations, that we can see that if we make a small mistake, we can have negative consequences because the loan finally granted to the final beneficiary is not eligible. The bank has to take off the financial instrument from that loan, and we have financial problems internally. It leads to the situation where relationship manager do not want to use this financial instrument anymore because of bad atmosphere around it. So in order to answer or to address this third type of risk, we should be focused on creation of a financial instrument which is easy to understand. I know this is easy to say, but I just want to underline that internal operational risk inside the bank is also a very important aspect and cannot be avoided.
Yeah, I think that's a really, really valid point, actually, Adam. Could you maybe elaborate then on some of the more difficult requirements that you think really pose those operational risks for you when you're managing an instrument?
State aid,
Yeah.
this is one aspect. Second aspect is reporting, where we have to provide a lot of data for energy efficiency projects. I'm not speaking about the easiest one like PVs, but the projects which are more, complex and include thermal isolation of the building or renovation of industrial machineries. This type of projects are quite difficult, and here in some cases we have to report a lot of data. And now I'm speaking more about the guarantees that are provided by national banks, because they have to obey certain regulations which requires the bank to follow strict procedures with the customers while granting a guarantee. And if we make, together with a customer, a mistake, for example, it says, "Are you SME?" And the company says, "Yes, I am SME." But it turns out that they employ plus one additional FTE and they do not qualify as an SME, there is a problem, because this loan is not eligible for this financial instrument. So that type of problems we have.
Okay. And switching it round, so conversely, have some of the requirements of financial instruments helped you improve what you do as an institution, both from a credit risk point of view, but also your operational management, your ability to navigate topics like state aid and eligibility and so on? Do you see like it's pushed you to enhance your institutional capacity in any way?
A lot, because we created internal team of experts. They mainly deal with technical problems, technical aspects of the project. This is done under the ELENA initiative, but we have also improved our internal capacity to report to supranationals.
Okay, thank you. Very interesting. So turning to Carlos and the French experience in BPE, could you please tell us, Carlos, what do you think managing authorities could put in place to help financial intermediaries go further, to do more, to address new sectors and help overcome market failures? What are your thoughts there?
At BPI France, we have tried to. We are very we got a very strong presence in France for ERD funds. So for example, in the last program, we had more than 40 funding agreements, and we have worked with a lot of management authorities. And each management authorities, they got a lot of different objectives, and we try to align with these objectives and in different sectors. But we try to standardize as well. So to answer the question, how can we go to this sector? I will talk to you about our experience dealing with this, because we have learned our lessons from the past. To be fair, we have created some loans and guarantee funds addressed to specific sectors, but sometimes this just cannot work if they are very restrictive. If we have tried to create loans, for example, for a specific area within a region, or just to address to a type of companies, or just address to a specific sector, and this doesn't work most of the times. However, what we have tried that works and works very well is that when we do a fund orientated in one area, and orientated to one area, for example, innovation funds, which we have a lot of success. We create these funds with oriented to some sectors. For example, we want to go to the industry or with the tech, or we want to address to the tourist area, but they are not restrictive. and they are just oriented to this area. But how can we be sure that that they follow the right path? To be more concrete, we do. Management authorities fix like strict guidelines where the fund is going to go, and we keep data of our companies that are being invested in these funds. And for example, just to talk about, we had a guarantee fund. It was very successful. The management authority wanted to go to the tourist area, and we had annual meetings with the management authority to survey if the fund is going on the right direction, on the right pattern. So and this is with data. We show our reports. And management authority was very happy to realize that the fund is going in the right direction. Also for innovation, it's a little bit technical innovation, but it was a very good success. And what happens there is that we sometimes it's quite technical innovation loans. So when we are not very sure that it complies with the desire of the management authority, we ask for a co-decision with the management authority in order to align to these objectives.
Okay. So you're calling for kind of flexibility, I think, from the managing authority's point of view in terms of guiding you in the policy targets, but giving you the flexibility to identify the projects and it not being too hard and fast, but then also helping you, I suppose, in those eligibility areas that are a little bit perhaps tricky to navigate.
Yeah, exactly, definitely. If it's too restrictive, it doesn't work. At least in our experience, if it's too restrictive, it doesn't work for us. So we have tried, but we have learned from that. But we got this flexibility to navigate. It works very well, but of course we need to follow the pattern.
Yeah, it's a balance, isn't it? You need to achieve the policy targets, but obviously you need to respond to the market needs as well.
Yeah,
Great,
definitely.
thank you. So if we could turn to Italy then and the CDP experience, and David, you could answer the same question, please. So it was around what can managing authorities put in place to really help financial intermediaries do more, address new sectors, address market failures?
When it comes to addressing new sectors, I would say, as I briefly said before, focus on increasing the risk appetite of financial intermediaries. And by this, I mean, I will make an example, it's probably easier. In GDP now, we're focusing we're thinking of launching a new venture debt product. Venture debt in Europe is quite a niche market. If you look at the size of the market in Europe, this is around 4 billion euros compared to 28 billion in the US, 16 in China. Israel has a venture debt market, which is more or less the one we have in Europe. It's 3.5 billion euros. So for Europe and for Italy, of course, this is a new market. It's a new market segment. It's not really served by private actors either. And now that we are thinking of how we can do this, what we realized is we need a high guarantee rate based not only on a loan by loan basis, but at portfolio level. So, and that's something that also Annalil mentioned before. There are these two dimensions. So high guarantee rates, possibly FLPs, first loss Ps, but also what we need to be able to finance up to a very high share of the underlying project costs of the companies we are going to finance. When it comes to venture debt, our beneficiaries they have negative profits, negative cash flows. They don't have the resources. So you step in and you support them. Again, risk-taking capacity, risk appetite of financial intermediaries, and since it was mentioned before by both Adam and Kirill, when we ask for, or when financial intermediaries ask for high guarantee rates, they're not doing this for themselves. Eventually, they're doing this for the companies they're going to finance. There is the so-called transfer of benefit. there is a direct impact on the interest rate financial intermediaries charge to final beneficiaries by simply replacing perhaps the guarantee fee on the portion of the loan that is covered by the guarantee itself. So you lower the interest rate. Mm-hmm. So for managing authorities, you always have to keep in mind that you're not doing this for the banks, you're not doing this for the private sector only, for the private financiers only, but you're doing this for the companies you ultimately want to reach. And I'm sorry, one last point. This is how you can make public resources truly additional to the market. The market doesn't get there, you provide money, the market goes there.
Okay, no, that's a really interesting point. And I don't know if you were here on the first day, but that actually came up in the podcast. We had a question around how we can support demonstrating the transfer of benefit. So I'm going to put you on the spot now and ask you, have you had any difficulty then in demonstrating to your mandator transfer of benefit to the final recipient?
Not really. In my experience, when you negotiate contracts with the European Commission, with managing authorities, you actually show them your numbers up to a certain extent, of course. But you actually you negotiate guarantee fees, for instance, and when you negotiate fees and you ask them to lower the fees, for instance, you also tell them why you need to lower the fees and how this can turn into a real benefit for the borrower. So not really, I would say, okay. Especially because that's when state aid comes into play. If you do state aid, you're giving an advantage to companies. If you're giving an advantage to companies, you're lowering the interest rate. That's how it works. Okay, thank you. And if I can just keep you with me for one more second. We spoke also a lot about combination, so combining repayable elements with a grant component. So do you see real merit in that approach, using the grant flexibilities of the CPR to enable you to go into new areas, address deeper issues? I have again another example to make. We do have an equity fund of funds for social housing, so it's one of the so-called high policy priority goals of the Commission. But I would say this is an issue across Europe, and it's certainly an issue in Italy. Of course, this is a market-based instrument, and being a fund of funds, we as the anchor investor at the level of the fund of funds, we accept, because we are an MPBI, we support a public policy goal, we accept lower returns than normal. If we could combine this financial product with a grant, for instance, being given to the underlying funds, which are ultimately responsible for building the housing projects. Of course, it would be really extremely helpful, because it would cover part of the underlying costs. It would act as some sort of first loss coverage, and this would allow us to build even more and to keep house prices and rents as low as possible for all those beneficiaries that eventually are gonna benefit from it.
Great, thank you. And Ali, if I may, whilst you're still with us, could I ask you for your reflections on that question as well, based on your experience in Estonia? So the question was, what can managing authorities really do to help financial intermediaries do more, attack new sectors, address deeper market failures?
Yes, actually, yes. We have a very close cooperation with our managing authority, because Estonia is a small country and we have to do a lot of cooperation on a daily basis. So actually, if we're setting up the new scheme, then of course we have very many discussions behind it. So everything is doing on the cooperation, actually. And if we're setting up the new instruments at the level of new areas that we haven't done any instruments, haven't implementing any instruments before, then of course ex-ante assessment is needed, as we all know, and then after that we have to somehow to agree which are the topics that we will cover into the, or what can we implement into the financial instrument as well.
And do you see strong merit in combination as being
Yes,
a part of the
it's an
toolkit?
issue. It's definitely an issue.
Yeah.
Yes, yes.
Okay, great. Thank you very much. Okay, so we'll move on to round two of the discussion now. So we're going to delve into financial intermediary expertise. And the first question is to Kirill at KBC, Bulgaria. So trying to understand, Kirill, what was the motivation for you to go ahead to become a financial intermediary and take on the rewarding but challenging role of managing financial instruments?
I'm feeling even younger with this question. I remember it was probably 13, 14 years ago when we heard about the Jeremy program, funded under ERDF a long time ago. And then, frankly speaking, I had no ideas about the financial instruments. It was more EU funds, the grant part, and we were very active in this. Then we submitted application for, and we had excellent cooperation with EIB Group at this time. We were using actively funding from EIB Group. And then we heard about Jeremy, we submitted application. It took about 1 year to launch the program. And it was not so exciting as I thought at the beginning, because neither the colleagues nor the market wanted to use it. I said, but what is this? We want the grants. And it took us probably 1 year to explain on the benefits of this program. It was very simple, 50% reduction in collateral and much lower prices. And suddenly the company started entering the bank and they were not asking for a loan, but for a Jeremy loan. So this became a brand name for an attractive product. And this continues already 15 years. Now it's of course not Jeremy, COSME, Innofin, InvestEU, RRF, and other generation of programs, but it obviously changed the market. It added a lot of value. We did also the Urban Development Fund with our Sustainable Cities Fund, where we are a partner. So what motivates us? It motivates us that it helps the customers. It helps us to be more successful, serve their needs. And are we ready to do more? The answer is more than simple. Our customers need more financial instruments to do their business. And we hope that in the light of the forthcoming changes of the cohesion policies and OEU policies, the budget for financial instruments will remain sufficient to serve in a best way the customers.
Okay, thank you. So you spoke about starting with Jeremy at the beginning, and then demand grew. Can you maybe just get into that in a little bit more detail? So was that because the products were working and knowledge spread amongst borrowers? Or was that because you really mounted a fantastic awareness campaign? How did you really embed the instruments in the ecosystem?
At the beginning, crucial for the success was one internal factor and one external factor. The internal factor in the bank, I'm talking with focus on Bulgaria now, as experience for KBC Group, was really the top management support who understands what is it about, because it's something new and it's a change project to introduce a new way of working in a huge institution. So I had the full top management support, and it took a lot of explanations, discussions, and the colleagues started understanding it. But next to this, it was crucial to do an educational campaign with the companies and to talk with them in a simple language. I was not talking about financial advantage, but I was telling them, the price will be with 3% lower. Collateral, I'll not ask for 2 apartments, but just for 1 apartment for the loan and stuff like this. So, and really helps. And
Work.
when they see the added value, they talk to each other. They say, oh, but this helps, let's do it. And of course, we see the benefits of the EU grants. And I don't say at all that they are not good, but we see that in the future there isn't a sufficient budget to fund everything with grants. So it's a combination for some customers in the EU. It's better to just take attractive loans, for the other to use the bit more complicated procedure for the grants. And especially now when we talk about the green transition, there are certain areas like the energy efficiency where the financial instruments can add further value. And here what we are very much interested in order to do even more is the combination of grant and financial instrument in a single operation, but following the more simple rules of the financial instruments. We believe that this may make the energy efficiency financial instruments more attractive.
Great.
And this is the future.
Yeah, no, I think we fully subscribe to that. Just wanted to keep you for one more second, if you don't mind. So yesterday, in some of the panel discussions, this idea that grant actually is a lot more difficult for final recipients to access than financial instrument support came through. And I wonder, do you subscribe to that grant actually is more difficult?
I would say what we do, in fact, in KBC is to explain in a simple language the differences between both approaches, and not to tell the customers this is better or this is worse. But when you use the grant, it will take longer time to apply. It's not so easy. You have additional reporting requirements, stuff like this. So you need to take into account the additional efforts for project preparation, for consultancy, board for preparation and management of the project. Probably also the postponed launch of production of your factory, of your investment, because of this lengthy procedure. While with the financial instruments, you can do it much quicker, just for a few weeks with a bank at very attractive condition. And the companies decide, probably, But we do both. Currently we have only in Bulgaria 1.5 billion euro exposure with financial instruments, active exposure. For example, in the SME segments, it's above 60% of all loans are done using financial instruments. And we are the largest financial institution in the country. So for us, the question is not do we need more, but the question is can we get more?
Yeah, great. Good line to end on. Thank you, Kirill. So Adam, if we can please go back to you. So thinking a little bit more negatively now. So if you wouldn't mind explaining to us what were the main difficulties that you encountered at the start of your financial instrument journey and implementation, and importantly, do you see that those difficulties and challenges are reducing over time?
Yes, so I can see three areas of difficulties. Area number one is the preparation phase, where we apply for funds and we have the due diligence with supranational, and for example with lag data, because we want to cover a portfolio of loans for a new sector, and we have no experience, we have just an idea how to do it, but we cannot provide the data from the past. So in such cases, there is a lot of problems, internal discussions, and we try to somehow find a solution for it, but it takes time and consumes a lot of energy. But over the time, we are, I think, more and more experienced in that field. Second is the operational part. Is when we need to manage to make IT changes in our IT systems for reporting purposes. This is quite expensive. If you want to make a small change in an agreement which concerns a massive product, you have to subscribe for IT resources. It takes time, it's very costly, and sometimes must be repeated several times because something changes in our contract with EIB, for example, and we have to make change again. So this is challenge number 2. And challenge number 3 is making the product go live. It's for some financial instruments which are more complicated, it is sometimes extremely difficult to explain the whole procedure to the relationship manager. And I think this aspect is, for me at least, the most important, because relationship managers are the ones who are transmitting funds to the market, and they should be able to do it the most efficiently. If they don't buy the product, we don't sell. If we don't sell, the financial instrument is not successful. And I think this barrier has been reduced over the time. And the fourth obstacle is, as I said in my previous comment, reporting. And at the beginning, we had a problem with reporting of even very simple energy transformation projects like PVs. But after years, we managed to create mechanisms based on statistical data. And right now, we were able to semi-automate this process. And I believe that it will also be the case in case of more complex projects.
Okay. And the difficulties you mentioned with the relationship managers, so that situation is improving. Is that because the knowledge of the relationship managers is improving and they therefore feel more comfortable with some of the more complicated products?
I think this is the function of 3 elements. First, we in headquarters, we are now smarter how to do it. Secondly, yes, relationship manager got used to the financial instruments and they are more skilled. And third element is because some of the financial instruments became less difficult.
Okay, great. Combination of factors then. Thank you. Okay, if we can go back to BPI. Carlos, could you please elaborate for us on the kind of specialist expertise you have had to develop as an institution in order to develop financial instruments and manage financial instruments?
At BPI France, it's teamwork because we manage ERD funds at different stages. So of course we distribute the loans we got our regional branches, which distribute the loans and they work with the banks for the guarantees, and of course they need to have all these skills about financial analysis, credit risk analysis as well. They need to be very good analyzing a loan request in order to assess the risk. But that's how all the banks do. But they also need specific knowledge when managing ERDF funds, and this knowledge came from us, we work in the headquarters. So we have our team is composed of different profiles. So there is a diversity of profiles. So we got law experts because it's important for us to understand very well the regulation, the European regulation, because we do different products, and when we are doing a new product, when we are kind of adventurers in this area because we want to always do new things, but we need to understand very well the regulation to do the best practice. Also, we got auditors as well on our team because we are very well. The National Auditing Authority. We are very control. We got a lot of controls, and to face an auditor, we need to think as an auditor. So we got auditors in our teams. They centralize all these requests and they argue with auditors if necessary. We also, it's important as well to, of course, to know how the banks work, so a very good knowledge about the bank system. Quantitative skills are very important as well. In our team, we do value quantitative skills because it's important to, as I said later, to do all these reports, all this survey and everything, which is going to be very useful for have a close contact with the management authorities that would like to report, that would like to have a very good visibility of what's going on with the funds. So, and also with quantitative skill, well, that's on our team, but we also work with the financial direction because, as I said, we like to go to develop new funds or new products, but it's important to work with the financial direction in order to elaborate the models for these new products. So it's important to do this quantitative analysis in order to assess the risk and to create the models. Mm-hmm.
So I was really struck then when you said that you have hired auditors to argue with the auditors. Yeah, wow. How many auditors do you have then in the team?
Yeah, so in this moment we got only one, but because we had to, but well, I'm an auditor as well a little bit, so we will say 3, 2, or, yeah, so I mean the team has moved a lot in the last time, but in this moment, yeah, we got one auditor specialized only doing auditing. So I'm auditor as well on my part, but I'm a little bit on different areas. So, but if not, yeah, between 1 and 3.
Okay. So your team will then prepare financial intermediaries, advise financial intermediaries on audit-related issues.
Yeah, definitely.
Okay. Oh, great. Thank you. So to David, please, and now in Italy. So this is quite a big question for you, David. So how can the European Commission, managing authorities, support financial intermediaries to help them develop the necessary expertise? So what more, I guess, can everybody do to help you do more?
Since it was mentioned by basically everybody here today, I would say ensure program continuity at EU and national level. As it was already said, it takes time to hire the right people, to build up the right team, to train these people. If programs keep changing or they get stopped for a reason or another, this is a problem because there is no incentive for financial intermediaries to invest in the right people. Just to make an example, in my team, 3 years ago there were 5 of us basically. Now we're almost 20 people, and we cover different areas. Myself, I previously worked for DG Competition, so I bring in the state, among others, state aid perspective. But there are many other colleagues of mine who have their own specific area of expertise, and by working together with auditors, modelers, because we also have colleagues from the European Investment Fund who joined as seconded national experts who are helping us doing this. By bringing people with different types of expertise, you can actually get to the point where you want to get, which is managing complex EU or national financial instruments. And this brings me to the second point I wanted to raise. What can the Commission do more, or managing authorities, in my opinion, is provide more guidance. When we started implementing InvestEU, which is, in my opinion, even a little bit less complex than other funds, it's a new thing. We didn't know what to do, how to do it. Stated rules comes into play. You have the guarantee to be managed. You have the InvestEU regulation, investment guidelines, a lot of different pieces of legislation. And most of the times when we ask for support to the institutions, we don't always get the answer that we need. So what one could do is promote staff exchanges between NPBIs, financial intermediaries, managing authorities, the European Commission, because if you go and you start working for an organization, then you go back to where you came from, you bring the knowledge with you. And the organization you're going to work for is also going to understand your perspective. When I was in DG Comp, I didn't understand the complexity of stated rules at the operational level. Now that I have to apply them, I understand the pain it is. So again, staff exchanges, more guidance, technical notes, everything to operationalize, if you so want, the rules of the game that sometimes are not that easy to understand.
Okay, and maybe apart from state aid, where do you think there is a greater need for guidance then? Are there any specific areas that spring to mind?
First of all, because there are many different state aid. There is the general block exemption regulation, there are the guidelines, there is the de minimis regulation. For people who are not used to working with stated rules, it's not always clear what the reference legal basis is. Again, as I mentioned at the beginning, the computation, the identification of the eligible versus non-eligible costs is not always as straightforward as it seems. Cumulation is another big point on the agenda. When you issue a loan to a company and you realize that your loan qualifies as state aid, the company has already received state aid for the same or other eligible costs, it's really hard to properly understand if you've reached the threshold or not, which is the reference article of the general block exemption regulation you should consult and you should refer to. So I would say, again, accumulation, eligible versus non-eligible costs, most appropriate legal basis. These are the three main problems we've had with that.
Thank you. Thanks very much. Okay, so final round of questions. So looking to the future then now. So a question back for Adam from BNP. So it's touching on the grant topic that we mentioned earlier, just trying to delve into that in a little bit more detail. So where do you think the provision of capital grants alongside financing could really help boost what you do with financial instruments? So maybe you could talk a little bit about what type of grant and which sectors you see has the most potential.
Yes, it helps a lot. In the past, we used to operate on several financial instruments, which also included grants, and these instruments were the most successful. Two were done with EBRD, I think one with EIB and another two with BGK. They were very successful because in one place the customer, we should always look through the eyes of the final beneficiary. This is my opinion. And the final beneficiary could in one place get funding with the subsidy, and this is what the market is expecting from us. So the idea of combination is great. We had two cases where the financial instrument was also supported by technical assistance, and it was POSEF program and Green Initiative introduced by EIB. And these two instruments were just excellent. And in the second one, we had also a small budget to remunerate the relationship managers, and it was a great idea to a little bit offset the cost of implementation of the financial instrument. However, we have one case where it didn't work, and this is a case for energy efficiency projects in Poland for individual homeowners, where we get the guarantee. We also can offer a grant, but the grant is provided by one institution, the guarantee is provided by the second institution. Sorry, it doesn't work. The whole process takes 2 or 3 weeks, and what is really important in that segment of customers, the demand is very much created by suppliers who are going from one house to another house, inspiring people to buy heat pumps, to buy PVs, and so on. And if they see a loan, because they are also selling the loan, they can propose the loan. Yeah? If they see a product which is available in an hour, actually, because we have the capacity to calculate the cost of risk and evaluate the customer online, yes, up to a certain amount, and it takes 1 hour, versus we have the second instrument with the grant. The distributors, they don't even touch it. Although they know the grant is very attractive for the customer, they are aware that it will take 2 or 3 weeks to get the loan, and it will kill the business, their business. So we have limitations, and we are not very successful on selling this.
Okay.
So
that-
process is essential.
So a grant-orientated process, again, then in your experience, is much more difficult than a pure financial instrument solution. Great. No, thank you very much. David, if we can go back to you, please. So thinking about now, again, future and new areas, which sectors do you really see the most potential in the future? What types of products, what innovation potential do you envisage?
Well, if I look at the example of a venture-led product, I would say biotech, deep tech, life sciences, all those sectors. But the point I would like to make here is, at least from our perspective of mandate managers, if you so want. I mean, I could again, I tell you biotech, deep tech, life sciences, defense, perhaps, but these are the sectors of today. Mm-hmm. These are important today. In the future, they will change, and they will keep changing. So the point for me is the next type of financial instruments have to be flexible enough for financial intermediaries to use them where they see fit. There's no added value in having a very rigid instrument or a very prescriptive instrument, because eventually, if financial intermediaries, based on their own expertise, tell you that we have to invest here and we cannot do it with the rules of the game that you have created or drafted 5 years ago, that's a problem. So again, not so much on the type of sector, but on the type of instrument.
And the flexibility to be agile and respond. Yeah. Great, thank you. All right, so the final question for the panel now. So it's for you, Kirill, if you don't mind starting us off. So what would be your key piece of advice, please, that you would pass on to a new financial intermediary about to manage a financial instrument for the first time?
I realize that this session is a kind of anti-aging therapy for me.
Oh gosh, you've not got younger again.
So now I feel with a bit more hair 11 years ago, when I got a mandate from the group. It's funny enough, initially the Bulgarian entity was the most advanced with the financial instruments. Now all our entities are really front runners with using them. But at this time I had a mandate for 1 year from the top management of the group to explore what is this strange animal, financial instruments, and how can it help the group? Is there any link with our group? And I had to present to the top management of the group the conclusions of my 1 year traveling around Europe and meeting with everybody whom I wanted. And the conclusion was very simple. The financial instruments are not an objective. There are two to achieve our strategic objectives, to deliver better services to our customers, especially our SME customers. And the 5 key success factors at this moment, and I believe they are still valid, are: first thing is you need a top management support in order to do this business. Second thing, it's a teamwork of the whole bank if you want to be successful with the financial instruments, because in fact it affects all possible directorates in the bank. The third thing, it's that you need a dedicated team to deal with these financial instruments, and if possible this to be a B-1 team reporting to a board member. because it's really a top priority topic. The fourth topic, the fourth key success factor is you need sufficient IT resources in order to do automations for the eligibility check and reporting. And the fifth key success factor is the dialogue with EIB group, with the domestic guarantee providers through national associations, banking association, EBF, and so on. And I want to use the opportunity to thank to the European Commission, EIB Group, all the ministries in the room, National Fund of Funds, on behalf of our customers for the great cooperation and the added value the financial instruments bring. Thank you.
Thank you, Kirill. Great. So now the other panelists have got the most difficult task of adding some extra pieces of advice that they would also give to a first-time financial intermediary. So Adam, is there anything further that you would like to highlight? What would be your key piece of advice to a new first-time financial intermediary about to manage a financial instrument?
Actually, it's a very difficult question. But I think that I would advise to concentrate on good communication, internal communication and communication with the provider of the financial instrument, because if we have some misunderstandings, it will negatively influence the future of the product. And secondly, if I had to start today, I would start with the easiest financial instrument, not with the toughest one. And I would concentrate a lot on sales forces, because if the sales forces love the product, then they will come back and ask for more.
Okay.
This is my comment.
Thank you. Great. Davide? Anything to add in terms of key advice?
Kirill mentioned all my points, so I will have to find a new one. But I fully agree with him. Totally agree based on my experience. I would say multidisciplinarity. Create a team where, because I would say banks or most of the staff working for banks, they look at the business perspective only. If you want to manage financial instruments, this is not sufficient. You have to make people work together in a multidisciplinary team.
Great. Thank you, Carlos.
Yep. I think that I do agree with everyone. I think that it's true that we do need the hard skills. I would like to, for me, I would like to add that it's the information is a key as well for us. I think that it's very important to have a very good knowledge about all this regulation. It's sometimes it's a little bit specific, very specific to working with the ERD funds or with the European funds. But information is a key. So if I will have to say an advice to someone who is starting, I will say to try to adapt all the resources possible to be part of the discussions, to discuss with other professionals working with this. I think that this is very important to discuss because we are all dealing with similar problems, and it's important to bring this help. So for me, that information and to discuss with other professionals as well. And I just would like to finish that we should not forget that in the European Union, we got the word union. Thank you.
Great. Thank you very much. Okay, so now it's time for the audience to ask some questions of our panel. We have got some questions on Slido, but we would like to have questions from the room as well, if anybody wants to put their hand up. Yes, oh, we've got lots of hands, great. So microphones should be finding their way to you. Just keep your hands up and so we'll go with this lady here, please. So if you can just say your name and where you're from, first of all, and then your question.
Hi, thank you for taking my question. I'm Camille. I work with small-scale fishers to improve their access to MFAF, and I'll be speaking at 11 on the first floor. I was wondering, we work with financial intermediaries in our work as well, with very small amounts, and I was wondering what are the financial incentives for you as financial intermediaries to work with this type of funding? How do you get remunerated? Because you said it represents a lot of investments. Thank you.
Great question. Who would like to? Kirill, you've got the microphone. Yeah?
When we are at such meetings, we usually talk also about the challenges linked to the financial instruments, and this is the increased reporting, some bureaucracy burdens, delays, and stuff like this. But when you see the picture from a bit higher point of view, you realize that, yes, there are challenges, but in fact, the benefits are much more. And this is the simple answer, yeah. You need to do some more investments, but you do more business, your customers are much more happy. So we do it. It really adds value.
Adam, anything to add in response to the question? Or Carlos, David?
I think I would fully agree with Kirill. Maybe something additional, the products provided through the cooperation with EIB, such as financial instruments, are in many cases step in the door for our sales forces. And we see it as an opportunity to increase the business and to enter new segments.
Yeah, great. Good answer. David?
It's in our DNA. We have a public mission somehow. So for us, of course, there's always an incentive when we you decide on using these funds. But there is also we are also playing a role. We're simply playing the role we were created for.
Okay, it's fine. So I think we had a question as well at the back of the room. If you could just say your name and where you're from, please, before your question.
Good morning to everybody. My name is Petr Votoupa. I'm working at DG Regio in the desk for Czech Republic and Slovakia. And I would like to ask our panelists how they see the cooperation with the national promotion banks. Is there a feeling of competition or rather a division of work? What to do to create a real synergy between the national promotion banks in your country and the private financial institutions? Thank you.
Okay, so maybe our two non-national promotional banks answer the question. So, Adam, do you want to go first and then
Yes.
Kirill? Yep.
We have areas of cooperation and we have areas where we are competitors. Of course, we cooperate in the field of guarantees, grants, and all that type of programs, and the cooperation is great. But on the other hand, Polish Development Bank is also supporting a lot of projects in the area of municipalities, where we also want to finance, and here we are competitors. But the fact that we are competitors is not influencing, fortunately, the first area.
Okay, Kirill, anything to add?
For us as KBC Group, the national promotional banks are not competitor at all, and we see them as synergy financial instruments provider next to EIB Group, EIF, and the other IFIs. So we believe the demand on the market for financial instruments is so huge that we need more financial instruments. They are so successful that we need more budget for them. And
there's room for all players to play a role.
Yeah, so
great.
We don't see an issue with this.
Great, thank you. Dana, can we have a microphone down here, please?
Thank you. Linked to the previous question,
maybe we should just say who you are, Dana.
Sorry?
Maybe you should just say who you are, just so the panelists know your role, because it might influence their answer.
No, better. I better don't say. So I'm an auditor from the European Commission. So if I take the example that I'm now a bit familiar with projects, providing financial instruments on energy efficiency projects. So if we have the national development banks that give loans for these projects, for reconstruction of buildings, with zero interest. At the same time, we have, for example, a KBC branch that gives for the same project, for reconstruction of buildings, for energy efficiency, so provides the same loans, but with 3% interest. So I'm curious to learn from you, how do you manage to mitigate these risks in terms of private banks? How do you manage to mitigate the risk? And what I heard, for example, sometimes explanations like we are, as private banks, we are less bureaucratic, meaning that it's less papers and maybe less control. So I wonder, is there a link between being less bureaucratic and less controls, or maybe more efficient? So how do you tackle this? And my second question would be, how do you tackle the conflict of interest during the implementation of financial instruments? Thank you.
Okay, so I think there were 3 questions in there, Dana, actually. So should we do conflict of interest first of all? Because that's maybe the most straightforward to answer. Adam?
Yeah.
Are you looking ready?
So in case of the question about zero interest loans versus standard loans, I would say that the National Development Bank has very limited ability to reach customers because of the number of branches and the number of workers, relationship managers. So here is our advantage, which we use to maybe balance a little bit the fact that our funding is commercial and their funding is preferential. But this is in case of the segment where there is plenty of customers. If we discuss the segment of municipalities, then the capacity of network doesn't really matter. The price matters, and we are, frankly speaking, out of the market in case the National Development Bank provides 0% loan.
Okay, we've literally got 1 minute left, so maybe just a quick comment, Kirill, on the conflict of interest.
I will try to cover the third question that was not touched, I believe. It was the less bureaucratic or more control. We realized that, because you're an auditor, I need to answer. But in fact, what we realized, obviously there is a conflict of interest between both things. But our mission when using the financial instruments, and this is our clear approach in KBC Group, is to digest the bureaucracy internally. It's our job as a bank to do it simple for the customer. So we do as much as possible checks. We simplify the process for the customers, but we keep it internally with us. So this is the answer in order to make it success.
Great, thank you. Hopefully you're a little bit assured, Dana. So I think that brings us to the end, unfortunately. We haven't had a chance to go through the Slido questions. There are some very good questions on there, so I suggest we try and, over the coffee, find the people who put those questions in and have a discussion during the break. But I think we now bring things to a close, and hopefully there will be a slide which will just remind us all what's happening next on the screen any moment. So we've got 30 minutes for a coffee break, and then we have our second series of panel sessions. So we have the EMAF session in the Buckeye room on the first floor, financing migrants, the Chestnut room, first floor. If you want to talk about green investment, you stay in this room. And then we have a very interesting session on participant reflections on the future of financial instruments in the Pagoda room, which is on the 8th floor where we had the podcast on day 1. But we'll end here now, so if you don't mind, please thanking our panellists for their very, very good contribution. And thanks to you for listening. Thank you. Okay, everybody, if we could ask you to please take your seats and get comfortable, we'll start very shortly. There's lots of room at the front as well, so don't feel like you have to sit right at the back. Great, thank you. So hopefully you're all still full of stamina after the FEE Campus Marathon. We're near the end now, so let's keep going. So in this session, we're going to talk about green investments and specifically EU taxonomy and the role of ERDF financial instruments. So we hope that we will, through the discussion, through the presentation, give you all a much better understanding of green eligibility, reporting requirements, and the potential implications for your roles and your work with financial instruments, and also give you an indication of the future direction of travel, the future steps which are underway to help facilitate implementation. So we've got a packed panel of experts to help guide us through the topic. But before we introduce the experts and we get into the panel discussion, Ula Hudina from DG Grow and Tina from FISMA are very kindly going to give us an introductory presentation to help set the scene and provide some context to the debate. And you're going to do the presentation from your seats, nice and comfortable. So the slides will hopefully appear. Here they are. And over to you then, Ula.
Thank you, Emily. Actually, to start, we will share, of course, the slides, but of course, I have the advantage here to start indeed. And we can actually immediately start from the EU side. Of course, you're aware of the European Green Deal. And we have two goals, meaning the most important one to become carbon neutral by 2050, and the interim goal to reduce the greenhouse gas emissions by 55% by 2030. And to achieve those goals, there are also financing goals. And these are massive. That's the green financing requirements, and there are several estimations, but those that we are usually now quoting, it's that we would need 700 billion euros per annum to meet these requirements. And obviously, as they are huge, it cannot be the public sector that would meet these requirements, and there is thus a huge financing gap that we would need to mobilize in private sector. And for mobilizing the private sector in, of course, there is also the role that the private sector has to help them to come back, the private sector, to navigate them and to eventually really reach the targets that I was just saying according to the Green Deal. But before we go deeper, you need to have the context, as Emily was saying, the whole context why we are having the EU taxonomy, a so-called classification tool. And here, of course, I'm from DG Grow, but it's under DG FISMA's responsibility, so I pass the floor now to Tina.
Thank you, Ula, and hello from my side as well. So in DG FISMA, we're working on developing tools that help with channeling this private finance towards environmentally sustainable activities, or to help companies transition towards a more sustainable operating model. And EU taxonomy is one of the tools that we have developed to do so. I would first like to explain briefly what EU taxonomy is and what EU taxonomy is not, as this is sometimes being a bit misunderstood. So primarily, EU taxonomy is a classification system. So EU taxonomy provides clarity on in what kind of way you need to perform a certain activity to be considered as environmentally sustainable, under what circumstances. Taxonomy can be also used as a measuring tool or as a transition tool in order to help a company sort of plan that transition towards a sustainable performance. Importantly, taxonomy is not a mandatory list to invest in. EU taxonomy also doesn't tell companies that they need to perform their activity in this way. It also doesn't rate the greenness of a company. Lastly, whatever is not green is not necessarily brown, meaning whatever is not in the taxonomy is necessarily a bad or polluting activity. It's just not classified in the taxonomy yet. how EU taxonomy is designed, it's also an important thing to discuss. So for an activity to be sort of deemed eligible under EU taxonomy, it needs to make a substantial contribution to one of the 6 environmental objectives you see on the right-hand side. And at the same time, it cannot cause a significant harm to any of the other objectives. So, for example, if you are producing wind turbines, you are substantially contributing to climate change mitigation, but your manufacturing cannot be done in a way that significantly pollutes waters or it's bad for circular economy objective, for example. And at the same time, in the way you perform your activity as a company, you need to meet certain minimum social safeguards. EU taxonomy is just one of the tools in the sustainable finance framework that we have. And I mentioned before, it doesn't oblige companies to perform activities in a certain way, but it does have 2 obligations, and those are both reporting ones. So one is obliging the companies, so large and listed companies in Europe, to report their alignment with taxonomy under the Corporate Sustainability Reporting Directive. And secondly, it's an obligation towards financiers to disclose the alignment of their products, financial products, under the Sustainable Finance Disclosure Regulation. How this works in practice is sort of mapped out on this slide, so you can see how the reporting moves from the companies towards the financial market participants and disclosures in their products. We are aware that this system is quite complex. It's new, it's not perfect, so our next focus is especially on usability, implementation, and potentially simplifying the framework in order to make sure it really works for everyone. We have started doing so, and I invite you to visit the EU Taxonomy Navigator webpage that offers a couple of tools that help in understanding the EU Taxonomy. For example, we have the EU Taxonomy Compass that has a more easier visual representation of what is in the taxonomy at this stage. Then we have Taxonomy Calculator that helps companies fulfilling their reporting obligations. Importantly, we have a FAQ repository, which includes all question and answers we adopted so far on interpretation of taxonomy criteria or taxonomy delegated acts, including reporting requirements, for example. And lastly, we have a taxonomy user guide, which is a broad guidance document on what taxonomy is and how it works for those who would be interested to learn more about it. I would like to conclude by also mentioning the EU Platform on Sustainable Finance, which is an external expert group that we have created in the Commission. And its main role is to help us and advise us on the sustainable finance frameworks that we're developing. It composes of about 50 experts, and they're currently working in 3 main groups. The first one is focusing especially on the usability of the frameworks. As you see, this is really very important to us right now. Then secondly, we have the technical working group, which is working on developing the criteria for potential new activities to be included in the taxonomy. And thirdly, we have a group that's monitoring capital flows. Before I pass to Ula, who will talk more about SMEs and their access to green finance, I would like to mention here that the platform is also importantly working on currently finding solutions on how to address some of the challenges and opportunities that Ula will present. And I would be happy to go a bit more in detail on that when we're on the panel.
Thank you, Tina. And importance of the SMEs for the green transition, meaning the slide itself evident why SMEs are so important. We tend to say they're the backbone of the European economy because they represent 99% of all companies, they create almost 65% of all the jobs created, and of course a tremendous percentage of the value added. But SMEs actually have been shielded from what Tina was now explaining from the taxonomy. But on the other hand, it would be basically self-defeating if we would have them outside the green transition, because that's the final point on the slide. Actually, they do contribute 65% to industrial pollution. So it's also a very high percentage. And by having this in mind, we also conducted some surveys, even though this one was conducted just before the COVID, but still it's very explanatory. The main question was whether, at that time, whether the SMEs have a strategy or an action plan to become sustainable enterprise. The 34% was the average result, whereas of course it was higher the percentage that we got when it came to the large companies. So it means that they were more prepared at that time. Hopefully now that things have changed, but it's still important to keep in mind that at that time, just before the COVID outbreak, they did perceive that financing, lack of financial resources was an important aspect, and these figures are also to be read with most recent figures of the so-called SAFE survey. It's what the Commission we do annually with the ECB, and there the average percentage for across the EU is that SMEs, 80% of them are dependent on external finance. So that's the bank finance, debt, finance, loans, working capital. So it remains a very high percentage that SMEs really depend on external sources of finance. And of course, access to finance is important, not just for SMEs, for any type of companies. And what we at the Commission we would really like to see, I will not say that the admin burden has to be zero, because this is impossible, but we would like that to minimize it, to reduce it. And of course, what's also the Commission role in all of this, to provide tools so that the SMEs could actually engage in this green transition. What this slide? Okay, the slide was not full. Actually, yeah, this slide is a bit smaller, so you might not even see everything. But what we've discovered through the basically through the inputs received from them, that even though that we've shielded them, that they are not actually under the SME, under the taxonomy, that there are lots of requests going into the direction of the SMEs, and this is actually coming from the two channels. The first channel is that SMEs already now, they do get reporting requests from banks. This is because banks, of course, they have tremendous pressure from the regulators, and this in the end has an impact on the SMEs, but on the other hand, even more important impact on the SMEs already now is that they get requests from their value chain partners. And while A, the SMEs do not know why they receive those questionnaires from the value chain partners, B, they do not know how to answer, because they think that this would impact their relationship with the large corporates. So by acknowledging all this, and by also trying to kind of help them to engage in green transition, we are aware that on the market there is actually lack of sustainable finance that it's appropriate for those SMEs, and in addition there is also lack of information for these SMEs. So these challenges that I just listed, we acknowledged them last year in the SME relief package, and this is why together with FISMA colleagues within the Commission, there are several work streams now to help them to actually work on a more easier standards. We call them the voluntary standards for the non-listed SMEs, those that I was saying now twice, that they're exempted from the SME or sustainable finance framework. It's ongoing work. We are, of course, awaiting the recommendations from EFRAG. EFRAG recently finished a public consultation. So when this comes to the Commission, of course, next steps would be taken, well, not by the current Commission, by the next one. But the objective is to really simplify it. And I stress here again the word voluntary. It will be for those SMEs that want to do so. But when it's voluntary, it's even more important that it's workable and implementable for them. And on the other hand, in addition to those reporting requirements already going in the direction of the SMEs, we do try to encourage the financial institutions to include green and transition SME financing in their business model. And this is also another work stream that is ongoing. It's in the making. It's nothing it's concluding yet. Very important were the not recommendations, more advice from the European Banking Authority end of last year as regards the green loans. And this is now what is being developed, but it's also later Tina will elaborate on this more in details. And moving from the, let's say, from the stick part of the reporting requirements to the carrot part, what actually we do have for the SMEs as final beneficiaries, and as actually you are the crowd here that you understand what's about financial instruments and EU funding. Of course, our main flagship program is the InvestEU, and there is, for the current financing period up to 2027, and with the quite a huge pot of money, the 26.2 billion of EU budgetary guarantee through the InvestEU program, we try to work with the local financial intermediaries, whereas our main implementing partner is, of course, the EIB group, and the EIB group, mostly through the EIF, then they have the agreements with the financial intermediaries across all the member states. And there are 4 windows. The one that we mostly work on is for the SMEs. And of course, with this program, we would like to see that there would be lots of money mobilized, especially to support the SMEs in their green, well, not just SMEs, but focus on SMEs in their green transition, digital, and of course also in the sustained recovery after the 2 crises that we've just faced. And under this program, we've developed 4 types of guarantees. I guess especially you here in the room, you would know the first 3 on the screen, whereas the new one is the sustainability guarantee. For this, we really had worked a lot with the EIB group to make it implementable. So there are criteria there that we think that they would make sense for the final beneficiary for SMEs, and there are also criteria what we think that banks actually, or financial intermediaries channeling the EU InvestEU funds to SMEs, that there are these records that should be kept. But important for you to know that this new sustainability guarantee, it's not completely aligned with taxonomy. It's taxonomy inspired. So they are, let's say, a bit simplified or more streamlined rules, which are actually now an inspiration for the work that Tina will explain later. In the interest of time, I will not go through all the criteria. I only wanted to mention that under the InvestEU, of course, there are also tools that we enable, and especially we are very proud of working together with the EIB group on the green tool, on the green checker. It's a portal that basically helps, it's for free, that helps the financial intermediaries, especially to implement what I was just saying, this new sustainability guarantee. In addition to that, instruments, of course, under the InvestEU, we also have 4 verticals with equity products. And I want to actually use the opportunity while talking to you, especially those of you who are from the member states, managing authorities, that under the InvestEU there is the opportunity of the so-called member state compartment. And some countries actually did decide that Finland, Greece, and Bulgaria did decide to top up from their funds, from the RRF, etc. funds, through the member state compartment for the SME, for the sustainability guarantee. If there are more countries to do so, they would be really welcome to do. But I just want to use the opportunity while being here that this takes time. So do not wait until the last moment if this would be the wish of your managing authorities. And in order to improve the knowledge across the EU, to spread the news to all these taxonomies, sustainable finance framework, different words just to start, but there is even more complex meaning behind. We are organizing Sustainable Finance Days across the EU this year, actually 4 ones, but yeah, we have ambition to continue to really go locally and to understand the needs that there are on the local market when it comes to implementing the EU Sustainable Finance Framework, and when it comes to financial sector offering green and transition finance to SMEs. And I think now that we were already too long, but yeah, we try to explain and give the starting point for the discussion.
Great.
Thank you.
No, thank you both very much. That was a really, really useful scene setter. And I think I noticed in the presentation there were a number of themes and challenges that you raised that actually we've touched upon earlier in the event around complex reporting, need to simplify, and need for standardised eligibility, need for a greenium. Financial instruments can obviously play a key role. So I think it's great that we've got you both here and the rest of the panel to really delve into the topic in more detail. So that's a good point for me now to introduce the rest of the panel. So you've met Tina and Ula, but now I would like to also introduce Emmanuel. from SG Recover. And we have Iona from EIB, Matthias from Rabobank, Alina joining us from Altum, and Marek finally from Bosch in Poland. So together we will go through a number of questions and a discussion, and then at the very end of the session there's obviously an opportunity for you to also interact. We'll have some Slido polls and we'll have some time for questions. So if we're all ready, we will get into our first round of panel questions, and I'll start with a question to Matthias from Rabobank. So EC colleagues have very kindly just presented the EU taxonomy to us, and obviously you're a commercial bank. What are the challenges and opportunities you face in trying to implement this as Rabobank?
Thank you. Well, as a credit institution, our main obligation under EU taxonomy is to provide reporting on EU taxonomy alignment of our balance sheet, roughly on 3 portfolios, so our assets under management, our portfolio of CSRD clients, and our residential real estate portfolio. And the biggest challenges that we face all have to do with data availability and data quality. So just to give you an example of data availability issues, is that we need to report on a residential real estate portfolio, and one of the taxonomy requirements revolves around energy performance of the underlying properties. Well, in the Dutch market in which we are active, there's no legal obligation to have a valid energy performance certificate at all times. So more than half of the properties in the Netherlands do not have a valid energy performance certificate. And this also trickles down in our reporting numbers then. So if we simply do not have the data to report thereon, it drops out of our green asset ratio. So that brings along that there is a storyline in our reporting. So data quality issues we have to solve internally, but data availability in the market, we can use some help there, for example, from the legislator.
So you are doing more green activity than you're actually able to report because of that issue?
Indeed, yeah. And with that comes a storyline that we also need to discuss with our stakeholders, with our investors, indeed. Then moving on to the opportunities. So, well, the goal of the taxonomy is to provide transparency in the market on sustainability, and I think that's a huge benefit for us to engage with our stakeholders on. But secondly, we think it's a super tool to use for sustainable finance initiatives. So, for example, we use EU taxonomy in issuance of our green bonds. And because it's such a credible European framework, it's highly beneficial for us to engage with our investors. And with the proceeds of those bonds, we originate green assets. And it's not limited to only the EU green bonds, for example. So also, basically every economic activity that's in scope of EU taxonomy has an opportunity to be sustainable finance. So we can use it across the board of our offerings. So that's really beneficial. Big opportunities there.
Yep. And you see more demand from your stakeholders, from your investors, for you to play a bigger role?
It's on the agenda of every meeting.
Great. Thank you very much. So turning to you then, Alina from Altum. You're an MPBI, so you have a slightly different role to Rabobank. You're a public institution, a development institution. So could you tell us about how your experience compares? What tools and other solutions have you had to develop to deal with some of the opportunities and the challenges?
Okay, thank you. So actually we do have one similarity with Rabobank. Like 7 years ago, we issued green bonds. We were the first Eastern Europe national promotional bank who issued the green bonds. And actually with this green bond issue started our green investment journey. So what does it mean? It means that the use of the proceeds which you raise in the capital markets. So we are forwarding them to SME loan portfolio. We are having like 4 eligible segments. So back in that time, it's energy efficiency, renewable, sustainable transportation, passive housing. So, and that gave us advantage to finance projects, I would say pioneering ones, because we brought ESCO concept in Latvia through this. The first electrical car fleet, shared car fleet, is also like one of those whom we fund through green bonds. So, and all that started like 7 years ago. The point why I'm spotting this is that through this green bond framework, and now since there is need for second party's opinion to be issued in Green Bonds framework, which gives assurance to investors that really those proceeds would be forwarded to those eligible green projects. In our situation, the second party opinion issuer was Ciceron, now within S&P Group, so which is actually one of the top in their expectations on green investments. And actually, those guys were the ones who triggered us to start to think on taxonomy. And actually, it happened like before taxonomy becomes compulsory to us. We are a public interest entity since we issue bonds on regulated markets, but in the same time, we are not supervised by our FCMCs and Bank of Latvia. So, and as public interest entity, we have to comply with CSRD requirements and taxonomy, say in spring 2026, reporting on 2035. So technically, we could sleep and wake up just like only this year. So, but due to these green bond requirements and the expectation of second party opinion issuer, we started this taxonomy alignment journey earlier. So what we are doing right now, we have developed our portfolio tagging methodology because expectation is that not only those green assets which are funded through green bond issues, but also other like SME loan, we are labeling them. But what we see by having this methodology to be implemented in real life is, as this colleague from Rabobank spotted, so either there are no data available in the market or either the projects are having a bit niche so that they are not eligible for taxonomy alignment. Okay. So it's like 10% missing to be taxonomy aligned, but still, I mean, it is, as of today, it is black or white. So I'm very happy to see Ulla's presentation and sustainability guarantee so that there is exploring and widening this definition of sustainable finance, because currently this green asset is very, very narrow, and if you look on your loan portfolio, I mean, just a very, very few projects might be aligned. So therefore, what we did a year ago, we developed a product which we call Transition to Low Carbon Economy, which allows a wider definition of great sustainable investment rather than the green asset. Unfortunately, there is no standard for transition bond issue. I mean, there's very nice standard on green bond issue, but there's no standards on transition finance issue. So therefore, this transition finance is really very, very much needed. So because you would agree that nobody becomes green just because on sleeping on green pillow, and this transition to low carbon economy doesn't happen over the night. So, and it is really like step-by-step process with very small steps. So therefore, this transition financing is very, very crucial in order to advance this whole transition process. And then if you look on our projects, on these real-life projects, then, for example, there are production processes which inevitable have to ensure high temperature. Still, you do it and ensure it through use of fossil fuels. So technically, it never ever would be green investment aligned. But in the same time, the corporate is having very strong wish to decrease this product's CO2 footprint. So therefore, if you keep this in mind as a bold target to decrease the CO2 footprint for the product or over the product's life cycle, then this transition finance is the one who helps and advances to this transition. So.
Yeah, no, it's a very, very interesting point that you raised there. So we have our green compliant projects, and then we have another group of projects which are almost green but are in this transition, sustainable area.
Yeah, and if you would look in the long term, for sure, this scope of transition would transfer to green, but at this moment, within like 2-3 years horizon, it's definitely focus on transition, small part on green, which inevitably will change.
Yep.
Say within like 10 years perspective.
And do you feel that you have the tools and the support available to you to help guide those companies from transition to green, or is that still an area that needs some more attention?
Actually, there is one where I would say very nice job we did in the Baltics, say in our banking finance association. In Latvia, we developed this standardized ESG questionnaire to the clients, to SME clients. It is, it comprises both very, very straightforward and also a bit strategic questions so that the customers are get used. Maybe he hasn't thought on this, but when he reads this questionnaire, I have to start to think on this. So nobody expects that he is ready on the next day, but at least it triggers him to start to think to this. Yeah. So, and what we manage, we manage that not only that all banking sector and also we as Altomas Promotional Bank, we agree to apply this standard questionnaire to our clients, but also the banking sector in Estonia and Lithuania, since we are having pan-Baltic in Scandinavia rooted banks. So the whole Baltic market, 3 countries, we are now applying this unified ESG questionnaire. So, and actually this is publicly available in English as well. So, and we also put, we developed CO2 calculator. Although it is for scope 1 and scope 2, so it's missing for scope 3, but at least they are the same algorithms, say, to be calculated, because otherwise, say in Latvia, since we are producing a lot of green energy, as a country, there might be speculation on conversion rates because they are they differ 5 times. So therefore, by having this standardized CO2 calculator, say for scope 2, at least we are getting that the corporates are calculating and reporting their CO2 footprint at the same conversion rate.
Consistently. Great. Thank you. It's really useful insight. So if you don't mind, now we'll turn to Marek from Bosch. So I cannot pronounce Marek's second name, so it's just Marek from Bosch.
We agreed. So for now, Marek from Bosch.
So delving down now into a bit more of the practicalities. So of the requirements, what do you feel stakeholders are finding it easiest to implement? And building on the question I think that I asked Alina, do you think that there is a role for technical assistance support, advisory support here to help mobilize partners on this journey?
Thank you. Szczepański is not easy to pronounce, and my sons are Jędrzej and Krzysztof. Don't try to pronounce it. So Marek from Bosch, it's fair. Second question, the shortest answer would be yes, it's needed, but of course I will shortly elaborate on that. But first of all, let me explain briefly where I'm from. Bank Ochrony Środowiska is a long name, again, hard to pronounce, but it's a green bank, a very specialized bank, and we were discussing before this panel whether we are promotional bank or commercial bank, and we are semi-promotional bank because we are relatively small, and our main shareholder is National Fund for Environment Protection, and this implies our role in the economy, and since for over 30 years we are concentrating on financing pro-ecological investments. I'm not using green because colleagues from ESG unit tell me don't use green because it can be treated, greenwashing, etc. So pro-ecological investments, and we are using a lot of public resources, including EU funds, to make our offer to our main clients, SMEs, municipalities, and housing associations to invest in energy efficiency, renewable energy sources, etc. And because I'm not an expert of taxonomy, I would rather concentrate on the practical aspects, being representing bank which is financial intermediary right now, and also we are using guarantee schemes which my colleagues from Ministry and BGK presented yesterday. So coming to your question, we see very huge difference between the large companies and SMEs. It's obvious. SMEs are not ready to deal with taxonomy. From this perspective, what was said by Tina about this navigator, it's from my perspective and our perspective, very good idea. And we are trying to do the same, but in Polish. And quite recently, we prepared, our colleagues from ESG and taxonomy unit prepared a guidebook for SMEs about the sustainable financing. And we tried, my colleagues tried to present in a very simple way the requirements connected with taxonomy, with carbon footprint, with some sectoral expertise, because we know that our clients, SMEs, do not know in majority of cases how to deal with these requirements. And we want to help them to prepare to apply for the financing which we are offering. And from this perspective, we managed to prepare this guidebook also because we got very good support from EIB under the EIAH scheme.
Green Gateway.
Yeah, and our colleagues were trained how to prepare, for instance, pro-ecological products and how to sell the products to the clients. It helped us to help our clients. What is needed, from my perspective, more technical assistance, but not for us, for financial institutions, but rather for clients. So extending schemes offered right now for the potential beneficiaries of finance, of green financing, would be very welcome. Later on, I will come back to this dealing with the taxonomy and financial instruments, but we agreed that we should be brief, so I will stop here.
Okay, thank you very much, Marek. So if I can go back to the Commission colleagues then, so Ula and Tina, so lots of feedback there. So is that consistent with what you've heard from other stakeholders? Is that ringing true with other comments you've had in the past?
Yes, all very interesting statements, and all the things that we're also considering and taking into account on our side when we are now reflecting what are our next steps. In terms of the feedback that we're getting is that for now, I mean, obviously we are still in early stages of taxonomy and taxonomy reporting, but there is impact on the ground. We've seen that in the compendium that the platform of sustainable finance prepared on the current practices, and you can also see it in a recent fact sheet that we published from the Commission side. So just maybe to throw in two numbers that we've seen. So on average, apparently about 20% of companies' capital investments are aligned with the EU taxonomy in Europe. In 23, around 600 EU companies reported capital investments in taxo-aligned activities, which amounted to around 190 billion euros. And in 24 so far, we've already seen that this number has risen to 250 billion. So within 2 years, we've seen around 440 billion capital investments in taxonomy-aligned activities, which I think is good. But of course, there are things that we need to improve, and that's the plan for us to do in the coming years, I would say. On one of the windows that we're looking at, of course, it's also transition finance. I think that's the big next topic to address, to indeed, as Elena nicely said, move then from transition to green. I think that will be one of our next focuses for sure.
Great, thank you. Ula, reflections from your side?
Yes, actually, as I work in Director General, talking or working with the industry and also listening to the business needs, actually, when it comes to green transition, the reactions from them, it has not been easy. And especially when it comes to the question of implementing the recent pieces of legislation, notably the taxonomy, it has been a bumpy road, meaning from the industry side. But on the other hand, as this bumpy road is indeed challenging, but there is so much opportunities yet there also from the innovation perspective. So this is why I would like to recall that this important role that taxonomy as a classification tool has already played in navigating those finance or the investment flows into those companies. And with this in mind, and then also having just listened to what Matthias said from the Rabobank, all the problems that you have with the lack of data or basically gap in this, yes, we've heard about this, and of course the lack of data or this should not be then the competitive advantage which banks has it more. It should be actually solved from our side, that all those reporting requirements that I was telling you before, that they would be, if they are voluntary, especially from the SME side, but that they would be also usable then in the end for the SMEs. And I think I think we have common understanding. The solution is not there yet, but we are working towards this. And as I was saying before, we are hoping for a good proposal that would come our direction from EFRAG. And then, of course, what Elina was also saying, it's really good to hear, and actually I can prove that I heard the same that you were saying, that Latvian banks are using the ESG questionnaire, that it's really in all the Baltics. Recently, with these EU Finance Days that I was showing before the slide, we were in Lithuania, they were exactly referring to this, so it's really good to know that the Baltic countries, they have their own questionnaire now, although we are the EU. From the EU perspective, we would hope that this would be more harmonized across the EU, but of course, if there are member states taking the concrete steps in helping then the SMEs in basically responding to these reporting requirements, it's really good. And even more so if there are 3 countries having the same approach. And also the inputs that we just heard from Marek, it's similar that we already heard, and especially the experience that you've had with the tools that we are providing through the InvestEU, with providing more information, not just for your basically bank officers offering the loans, the green or transition loans to those beneficiaries, but that they are really equipped with the wording, with the vocabulary that the final beneficiaries in the end understand. I think this is important. It's really this lack of information that I was trying to pass the information before. So I think I'm happy to hear that the reflections that you provided now to this group are actually what we've been hearing from different stakeholders, especially from the industry.
So there's consensus.
Yeah,
yep,
I think,
great,
yeah.
which is brilliant. So if we stick with Marek's feedback actually in relation to the final recipient level, and we think about the difficulties, the opportunities, but also the developments in relation to applying EU taxonomy at the SME level, could you tell a little bit more about your thoughts in that area?
Meaning, this is the ongoing work stream that we have. As I was trying to paint the picture before, it has been really difficult for them, for obvious reasons that I was saying before, because there are requests coming to them from the banks, because banks need the data, obviously, and from their value chain partners. So in order to address these challenges, following this SME relief package that I referred before, with FISMA we are now working on this. Of course, as I said before, it's not complete. It's everything in the making, and what's most important now that most recently we've touched base, we've started talking also with the platform on sustainable finance, and they are now working in two of their own work streams. One would be for the listed SMEs, those that already have to comply with, let's say, more obligations stemming from the CSRD. But more importantly, what it's important for us that the platform is working on a more, let's say, streamlined, simplified approach for all the other SMEs, those that we are now discussing here. And it's more that Tina's team, they're in contact with the platform, so I think it's worth passing the floor to Tina, not to go into her territory, but it's from this work that it's to be, let's say, some proposal coming by the end of this year from the platform. We will take it forward and really try to address the challenges that you are explaining, especially from the financial sector perspective. What you would need then to continue financing the SMEs, both, not just the green, but also transition finance. I think this is important.
Thank you, Ula. I can just briefly touch and introduce a bit what the platform is currently looking into. So they're looking into 2 ways on how they could help SMEs. First one, as Ula mentioned, is focused around simplifying the demonstration of compliance. This also touches a bit on what Matthias was saying, mentioning the real estate sector, for example, how hard it is to find the compliance for certain criteria, let's say. So here, the platform is going to help us to identify where these problems are and how we could support companies in basically simplifying the compliance within the existing criteria, and where we can find an easier way. And then secondly, the platform is looking into ways to recognize SMEs' environmental performance outside of the taxonomy framework. And this links a bit to what Elina was saying about the sort of transition finance that you are looking into, or having companies or SMEs that fulfill 90% of taxonomy criteria but not all, so it can't be considered as taxonomy aligned. And this is what we see also within the sustainability guarantee tool, which is taxonomy inspired. So this work stream is looking into developing a tool based on the sustainability guarantee where possible, where we have criteria, where we need to develop criteria that's not in the guarantee yet, also how this could be done, where you would have basically just a few matrices that a company needs to fulfill in order to gain some type of sustainable funding. And the aim at the end, once we receive this recommendation, and if it works, we would like to use it to develop some voluntary loan standards, for example, the green and transitional one, based on the EBA guidance that we also received. And maybe importantly to mention is that the platform mapped out these two ways in their response to EFRAG consultation recently, because of course these two ways also needs to work with what EFRAG is proposing. So the idea is to have a complex system, but that works for all different streams.
Yeah. So potentially then we could have an EU green loan standard, we could have an EU sustainable or transition loan standard with the tools to help the intermediaries and the SMEs to actually assess their compliance, their eligibility against those. Can you say anything in terms of timing on those developments?
So for now, as Ula said, it's in the hands of the platform to give us this advice. Their mandate ends by the end of the year, so we're hoping to receive that in time, and then we'll see. I mean, we're also getting the new commission, so this will be the things we will discuss once we have a new commissioner.
Great, thank you. Okay, so that was a great first round of questions, so thank you all. We'll move on to our second round now, and gets a little bit more tricky, at least from my perspective. Do no significant harm. So we've heard from lots of managing authorities and financial intermediaries, this is very much a hot topic, so very much hope we can try and help and put some clarity behind it. So, starting with Marek, then, if you don't mind, Marek, grabbing a microphone. So you mentioned the wider role of Bosch in green financing. So you have been exposed to the do no significant harm topic and all of its requirements, not only under EU taxonomy, but also in relation to cohesion funds and financial instruments. So can you please tell us a little bit about your experience in this area, and specifically what have you identified as the key challenges and ideally some solutions?
I'm afraid I will not have solutions, but okay. I would like to highlight some challenges. The main challenge is the complexity of and the differences between rules. Okay. DNSH is one thing, but the second, from my perspective, related issue is eligibility of financing, eligibility of projects. And for us, the bank was using resources from EIB. We have a loan line and we are offering loans to our clients. We have cooperation with BGK using guarantee schemes, blended instruments, very nice instruments. So we have different rules. We are financial intermediaries selected by BGK, and we are offering preferential loans in one of the regions. In all the schemes, we have different rules. We have different eligibility criteria, and this is a nightmare for my colleagues, for us, to persuade, to show the advisors on the ground what is eligible in this scheme of financing, what is not. So this is the challenge, and I do not see the solution, I'm afraid. Poland is a complicated case because we have 16 regional operational programs, and in all the 16 programs we have different rules, so you can imagine. But from the DNSH rule, we are quite safe so far. because managing authorities prepared the guidelines how to deal with this. And what is even more important for us from the practical point of view, we have rules what investments are eligible or not. And we are asking our clients, final recipients, to confirm that they are aligned with the rules, and we are checking whether the investment is in line with the guidelines provided by managing authorities. So from this perspective, it's safe, but it's not as simple because we see the difference between the national approach to DNSH rule, and this is coordinated by the Ministry of Technology, and the rules for cohesion policy resources. And there's a special working group which is trying to merge these two requirements, and we are very keen to see what will be the results. Hopefully it will be simplification, not adding some burden to the final recipient's clients, but we'll see. Thank you.
No, I think that's a very practical approach. We've heard other stakeholders actually applying that as well. So basically building in the do no significant harm into the eligibility requirements. So if your project is eligible, do no significant harm has already been addressed. Yeah, that's one way. That's a great way to do it. And then on the eligibility point, we were in Vilnius together, I think, Marek, where this came up, the Fee Compass event last November. We had a session which we called, I think, 50 Shades of Green, where we touched on that issue. And I think if I'm not mistaken, Tina, if we were to be successful and we were to have an EU green loan label and an EU sustainable loan label, then would we not aspire for cohesion funding also to have similar criteria, bring everything together? You don't have to answer if you don't. I think it's a nice goal. Yeah, I think we should all push for that. Okay, thanks very much. So to Matthias, please, now from Rabobank. So you also have experience in implementing do no significant harm within the bank. So from the bank's perspective, what would you see as being the main difficulties, and how did you overcome them? What tools did you use to address them?
Well, first, it's important to understand that the application of do no significant harm for us as a bank is somewhat different than in the financial instruments of the European Union. So on the bright side, we have very clear-cut technical requirements for each and every economic activity that's in scope of EU taxonomy. But here also lies the challenge and the difficulty, because for each economic activity that we invest in or that we finance, there are different do no significant harm criteria that we have to check. And it's very complex and very time-consuming to perform that analysis with the client, for example, on a case-by-case basis or on a project basis. And I think it's becoming a theme in the panel to also take along the SME perspective. So with our large clients in scope of CSRD, it's actually okay to engage on do no significant harm, because they have to report on the EU taxonomy, and they are very much familiar with the concept. So the biggest challenge is for the clients that are not in scope of CSRD and engage with them. And if we want to do that, we first need to educate them on the EU taxonomy. What is it? What are the technical requirements? And it will cost severe capacity and time investment of our clients, of our SME clients, to get familiar with the concept. And the question that we always get when talking to those clients is, what's in it for me? They are looking for an incentive to cooperate with us on the EU taxonomy. For example, by means of a greenium, of a financial discount. And this makes it very hard for us to incorporate SMEs in our EU taxonomy scope, because this should be a viable business case for us as a bank to invest the time to educate those clients, and also for the client themselves to work with it. So I think now the application to SMEs is for that reason quite limited, and I very much welcome the initiatives to look into how can we broaden our perspective more on the SME side. Yeah. Okay. And maybe in terms of toolings, we have none. We use our own checklist. We analyze the taxonomy requirements. We draft internal checklists to see how can we evidence the alignment. And for some economic activities, that's straightforward and we can do that. And others, there's simply, again, a lack of data, or a lack of a viable business case to engage with clients.
So could that burden then be also dissuading you from reporting those investments as green?
Indeed, yeah.
Yeah. So your Tina's was it 440 billion? That could actually be a lot bigger, actually. Yeah. Okay, great. Thank you, Matthias. So turning to the EIB experience. Oh, actually, sorry, no. Emmanuel, RRF. So you have been leading on the Do No Significant Harm for RRF, which is a huge facility, and we know that Do No Significant Harm requirements run right through it. So could you perhaps reflect on your lessons learned from your experience in trying to navigate the issues in relation to RRF and Do No Significant Harm?
Yes, absolutely. Many thanks. So indeed, if private money goes in one sense, public money cannot go in the other sense. So the way it was decided for the Recovery and Resilience Facility was that the 650 billion facility should do no significant harm to the 6 environmental objectives of the European taxonomy, to make sure that all the funds that we are pouring together are future-proof and go in the right direction. And from this, I think the few lessons we've learned is first that it's possible to do this. It has been implemented in a very extremely fast way. Just to be clear, it's a distinct requirement from the taxonomy DNSH, so it's not exactly the same criteria. We have adopted a different approach. So concretely, the first lesson is really it works on the ground. It's possible, and it allows all the funds to be future-proofed, as I mentioned, to avoid that we're financing some fossil fuel activities that will be obsolete in a couple of years. The second lesson, I think, for us is there is still space for simplification on the way we approach this. So the way we approach is member states have to carry out their own assessment of the different measures they have in their plan. So we know we can simplify, for instance, being clearer ex ante on which criteria we want to apply. And also be clear on which type of evidence, evidence can be provided to demonstrate DNSH compliance. And finally, I think we can be also simpler in the way we have implemented this, and more probably flexible in acknowledging, for instance, other frameworks, like the European taxonomy, for instance. So not only duplicating, like having another standards, but also acknowledging, we've done that, for instance, with the EIB Climate Bank roadmap, acknowledging other types of frameworks that can bring comparable benefits.
So moving towards a single and consistent approach for all types of EU funding then?
Yes, that will be eventually, I think, the intention. So now what we have done very recently is publishing guidance for consultation for the Social Climate Fund, which will aim at mitigating the social impact of the extension of the ETS to, in particular, transport and buildings. So member states are putting together 86 billion, on which we're going to apply the DNSH principle, but we'll learn from the lessons from the RF, as I mentioned, to apply this principle to the new facility. And here, the consultation is open to all stakeholders, so I really invite you to react to this. We have, as I mentioned, tried to be simpler, more flexible in the way we approach the standard, but also clearer with all stakeholders. Having said that, I think, so we are developing a new guidance for the Social Climate Fund, but as you mentioned, we are now applying the DNSH principle to more and more funds in the EU, the RF, of course, Innovation Fund, Modernization Fund also, Cohesion Fund take the principle into account. So it will make no sense that under certain funds, certain criteria applies and not under other funds. So having distinct, not incoherent approaches will make probably little sense for the end beneficiaries and of course for the promotional banks. So it's our intention in the future to reflect on the possibility of this single DNSH guidance, applying also possibly to the next MFF as it has been committed in the financial regulation where feasible and appropriate.
Okay, and so you'll use the social fund consultation as a first means of getting some feedback from stakeholders in that regard. So that's quite important then. So people may not have realised the importance of that consultation. You may have dismissed it because you may have thought, oh, that doesn't actually concern me, but the findings of that consultation could potentially be quite significant then. Great. So check that one out then. And then last but not least, Iona, sorry, we kept you waiting, from EIB. So you are working closely with managing authorities, trying to help them navigate and implement Do No Significant Harm under shared management funds. So can you share with us some of your experience and also explain to the audience what technical assistance and advisory support is available to help managing authorities navigate this area?
Yes, of course. First of all, I mean, DNSH is a new requirement, so it was new for the managing authorities. So I would say that's the first difficulty in implementing DNSH, because you need to understand what is it in order to be able to implement it. Then it's the issue that the rest of the panelists spoke about, that there is not a single set of rules. Different EU instruments or programs are using different approaches, and that makes it quite difficult for managing authorities to implement DNSH, especially since they have to handle different EU programs. And streamlining, I think it will be necessary, and it will help really a lot the managing authorities in implementing DNSH in their programs. Another topic is the EU taxonomy has specific technical criteria for DNSH, while for shared management funds, the definition of DNSH from the taxonomy is used, and that's more related to the notion of do no significant harm. And especially in the beginning, I think it was a bit unclear for the managing authorities exactly what they need to do, what level of assessment they need to do in the selection of operations, if they need to use the EU taxonomy DNSH criteria for the selected operation, and also in some cases they were thinking if they need to do a case-by-case assessment of the selected operations or not. So it was unclear, especially in the beginning, how DNSH will need to be implemented in the selection procedures. Especially for cohesion policy, DNSH assessment has two levels. So there is an assessment at the program level, and there the managing authorities, they needed to show that all actions included in a program are DNSH compliant. And then there is a second level during implementation and selection of operation. In the second level, during the selection of operation, the managing authorities need to ensure that the selected operations are compliant with DNSH compliant actions from the approved programs. And in case the DNSH compliant actions had some mitigation measures related to DNSH, then those measures will need to go down to the selected operation. So that's a difficulty, I would say, for managing authorities to ensure during the selection procedure that all the requirements or specifications from the DNSH compliant action go down to the selected operations. And of course, financial instruments are not excluded, so all these need to apply also to financial instruments. So there the managing authorities need to decide how they will ensure that, either through the selection procedure or specific conditions in the funding agreements later on. So those are difficulties, I would say, that managing authorities encounter with DNSH implementation. And another theme that you heard from the fellow panelists is the SMEs. In many countries, the EU programs have a lot of very, very small operations with SMEs. So for managing authorities, it's quite a task to see how they will ensure DNSH implementation, and also I will say climate proofing implementation, which is another area, in very, very small operation, SMEs operation, because As we heard, SMEs, they don't have the experience, they don't have the knowledge about DNSH, so it's quite difficult to see how it will be actually implemented. So that's an additional issue that they encounter. And a final thing that I think we didn't mention yet is about monitoring. How they will monitor if those specific DNSH conditions have been actually implemented. So I think for managing authorities is quite a task and a lot of things, and especially in a new requirement that they didn't have experience so far. Of course, there are technical assistants to support managing authorities. I mean, EIB and my team, Jasper's team, is supporting managing authorities, regions and countries in the implementation of both the DNSH requirement and climate proofing. There is the technical support instruments from DG Reform that also has done a lot of work and helped countries in the implementation of DNSH. FI Compass is helping with awareness raising and knowledge sharing, which is very, very important, I would say, because it's a new requirement and people, beneficiaries, stakeholders are not aware of it. And of course, in terms of coordination, there is the ENEA-MA meetings that help a lot countries to understand what is the requirements, how they can implement and how they can streamline approaches. So yeah, that's an overview.
Thank you very much. A very good overview. Una, did you want to comment?
Yes, I just wanted to add something because, of course, all the problems that Ioana was referring to when it comes to managing authorities and when it comes to SMEs and especially the significant harm, I forgot to mention before a recent study conducted, basically supported by DG Grow, but conducted outside by Synthesia and Oxford Research. The data was gathered last year, but results were published 2 months ago. And the objective of this study was to check what would be costs and benefits for SMEs should they report on the taxonomy alignment. And the findings were that these costs of complying would be excessive, would be really very costly, and would not outweigh the benefits that SMEs could get with more access to sustainable finance. But within this study, there was also an important finding that for the SMEs, the most difficult part was to comply with the do no significant harm. So it's actually what you've been also perceiving when it comes to data then through the managing authorities. And I think it's an important study. Of course, it's an external one, but for us, it's an important input that gives an additional argument why we are working on a simplified approach for the SMEs when it comes to taxonomy. And then also inspired by Ioana's last words on the TSI, on the technical support instruments from another commission, DG Reform, that actually we've seen it on the ground. This year, of course, there is an additional push through the TSI to help the managing authorities in sustainability reporting. But we've seen a clear result very recently. I'm again referring to Lithuania, but following the TSI support that they had got or that the managing authority asked a couple of years ago, now the Ministry of Finance has actually established the Green Finance Institute, and this Green Finance Institute there locally, it's to actually address all the challenges that we were actually discussing here today and to follow the market developments and then to try to find solutions and to correspond with what's being made at the EU level. So I would very much support what Ioana was saying, that it can give very good results should the managing authorities, of course, decide to ask for this, because the request has to come from the member states. Yeah.
Thank you. And just to add on the do no significant harm topic, that we did have a Fee Compass Knowledge Hub at the end of April on the topic. We had quite a number of managing authorities and MPBIs in the room, and it was a very long, I'm not sure it was completely fruitful, but it was an interesting discussion. But we are working on a note of that meeting, which we will get out to you all, I think, after the summer now, in all honesty. But we will try and put some clarity together with DG Regio colleagues on the topic and what it means for financial instruments, just to make things a little bit easier as we move forwards. But we've all spoken quite a bit now, so we would like to hear from you. Before we move to questions, we do actually have some Slido polls, just to get a quick reflection from the audience on your feedback on some of the key topics that we've been discussing. So the first poll is, do you face challenges navigating EU taxonomy and do no significant harm requirements? Yes, significant. Yes, minor. No, there are no issues. Okay. That might just be one person. Please feel free to answer honestly. Okay. Okay, there are significant issues. We can unpack some of those perhaps over lunch if you've still got energy. So moving to the next poll question. So this is building on some of the themes the panel have discussed. So do you need to apply different green eligibility frameworks in your organisation? These could include EU taxonomy requirements alongside green eligibility requirements from EU cohesion, RRF, or other green financing. So yes is more than 2, yes more than 1, or no specific issues. So just trying to understand how many different eligibility criteria you are navigating on a day-to-day basis. More than 2. And I guess it could be more than 3 if we had another question as well. Yeah. Okay. Right, so the majority of you are navigating quite a complex implementation framework. Yeah, that's very good feedback, thank you very much. And then our final Slido poll is in relation to do no significant harm. So, help us help you. What could be the potential solutions to simplify do no significant harm requirements? So more guidance on how to apply the requirements, a revision or simplification of those requirements, a harmonisation of those requirements, or another idea? Okay. Strong demand for revision, simplification. Emmanuel, any reflection on that? Or do you want to reassure the audience about, or not?
I think what I can say is, at least on the RF side and social climate fund and EU funds possibly in the future, I really invite you to consult the guidance that is for consultation now, because it's really what we're trying to do. So to have really targeted requirements, not for each objective in every circumstance, but really for those that are the most material risk of doing significant harm. So I hope we responded to this call somehow.
And the consultation, do you want to just mention the consultation again and the closing date, just so that everybody is aware of the importance of responding to that?
Yeah, the consultation is open for 8 weeks until the 13th of August. And of course, we are very happy also to have any bilateral exchange in the meantime to better understand any constraint on your side.
Great, thank you. Okay, so now we've got some time for questions, so we can have questions from the room. That would be our preference, because we always like to hear voices. So if you have got a question, please just put your hand up and then a microphone will be brought to you. Otherwise, we will have a look at what we've got on Slido. Yes, please, got a question? The microphone is on its way to you. If you can just say your name and where you're from and then your question.
Yeah, thank you. Good morning or afternoon. And I am Justin Hrdinka from the Czech National Development Bank from the Czech Republic. At first, I would like to include the DNSH agenda, because last year I was asked about the new financial instrument we are developing, what we know, what are the obstacles, and my clear answer was, we know how to do guarantees, loans, but we don't know how to apply DNSH. That's like a nightmare for SMEs. So I'll give you one example and then I'll follow with 2 questions. The first one, that we are working with managing authorities, with different managing authorities. We have just one program on energy efficiency in buildings, and each different managing authority has a different requirements for fulfilling DNSH. And we are working with clients, with SMEs, and it's really difficult to explain to people, the small business, that if they get money from the Ministry of Industry and Trade, they need to fulfill different criteria than if they get money from a Ministry of Social Affairs, because the DNSH and the EU taxonomy is just one. So my question would be, and this is really big obstacle, so my question would be, will the EU work on a kind of simplification in terms of scale of the project? Because I don't feel appropriate that the same criteria should be applied to a project that costs, or the investments are of, let's say, 100 million euros, and the same criteria should go for a project with 20,000 euros. And I think it was here last year an example from Croatia that they offer loans to SMEs in the high of 10,000 euros, and to fulfill with the climate proofing and DNSH, they have to pay consultants, and they have to pay 4,000 euros to get the beneficial loan for 10,000. It really doesn't make sense. So my question would be, will there be a simplification that will somehow distinguish between the small, medium, and large project? That's the first one. And then the second one, basically, will there be work to really harmonize the approach for the same level of investment, the same area of work, like for example, insulation in building and so on, so these could be applied the same regardless of the source of money, regardless of the managing authority. Thank you.
Okay, thank you very much. So, the do no significant harm simplification question, who would like to take up the challenge, Emmanuel?
Maybe I can start from one angle, and maybe like from the EU funds angle, and if you want to complement on your side. So on the simplification and small versus large, it really depends, I think, on the type of like the legal background we have, in the sense that it's when the legislators have agreed to set such an approach. Is the case, for instance, for InvestEU. There is this possibility to discriminate between small and larger projects. It's not always the case. It's really legislators that make this decision. In the document you receive for consultation, we don't have the space to distinguish between small and large projects, but still what we do is integrate proportionality concepts within the annexes, so within the criteria themselves. Meaning, for instance, a renovation above a certain threshold of square meters will make, of course, more significant harm than a small renovation. And in this way, we capture this distinction between on the size of the project to allow this simplification. When you're below this threshold, there is basically no additional requirements. When you're above, you will have some requirements. So this is a way where we can capture this point. And then on the harmonization, I think this is all the work we've done. We have tried to, of course, integrate all the background of the taxonomy, all the work that has been done, all the work also on cohesion, on InvestEU, and RF, of course, to try to simplify this approach. Now, I think harmonization, all this will probably be for the next Commission. We'll see how the principle applies to the next MFF. So I think in 2 years more, we will be able to say more on this point.
I just wanted to add, to complement Emmanuel's. Indeed, under the InvestEU, we do have these criteria already embedded on the proportionality for the obvious reasons, exactly what you were explaining. And like Emmanuel was explaining, in this ongoing public consultation in the annexes, you have certain proportionality, and especially for the example that you gave in the buildings and energy efficiency. But we would also appreciate if such examples that you're saying, that they could be actually a clear voice from you or from the Czech authorities, meaning anyone can respond to the public consultation, that much more proportionality, it's in addition to the annexes, also in the guidance, but these inputs have to come from you, meaning we try to have them, and we've had this discussion also internally, but the more examples, the more problems encountered by you we get through the consultation, the better it is then also, not just for us currently at the technical technical level, but even for the next commission, exactly to address what you were saying. So it's more an invitation to really share with us, not just at this level. Of course, it's important that we heard it, but also formally from the authorities to address the proportionality. Thanks.
And maybe just briefly on the private finance side, we are aware of that especially maybe certain do no significant harm criteria are difficult to meet. And this is part of the sort of the simplification exercise that I mentioned before. So we are looking into criteria for in specific sectors, especially in buildings, renovation, construction is one of them, and we are planning to introduce some guidance on how to comply with them, or if we see that is even not enough, maybe potentially simplify where needed. In terms of the differentiation between the different sizes of projects, of course, taxonomy doesn't do that, and it's primarily focused on large companies, but with this approach that we are thinking and the platform is developing for SMEs, we're also aiming to then address indirectly smaller investments.
No, thank you very much for answering the question, and hopefully that helped. Do we have any other questions in the audience? If you'd like to ask a question, please just put your hand up. Otherwise, we will have a look at the Slido question. No? Okay, we'll have a look at the Slido question. So, does the complexity of aligning EU taxonomy lead to an increase in price offered to beneficiaries, i.e. higher rates, and would simplification reduce price? So I think that's a question for our colleagues from the banks. So Matthias, do you want to have a go?
Very, very good question. So from a private perspective, from a private bank, I think currently this is not translated into the price. Actually quite the opposite, because as soon as clients can incorporate sustainability in their financing, they need to take additional steps to prove their sustainability initiatives, and they actually want a discount for that. So instead of more favorable, instead of higher rates, they want a more favorable pricing, and this does not take into account all the effort that we as a bank also need to take to check and verify whether we actually talk about the sustainable facility. Maybe just as a teaser, I think we will move somewhere down the line to a model in which the sustainability pricing element will get incorporated in the credit risk modeling. So sustainability should be an integral part of credit risk modeling. And we also try to challenge our stakeholders now, and if we see a possibility, also our clients, to say, okay, the prime reaction is now, can we get a discount? If we put sustainability on the table, they want favorable pricing. But you can also think the other way around. If you are not sustainable, we give you a penalty. And just for everyone to consider that, I think somewhere down the line, this is where we should go to, because if a business is not proving it's moving towards a sustainable economy, then there's more risk involved to the financing party.
So a reverse greenium, so you basically pay more if you're not green.
Indeed.
Yeah, that's a really good concept. Alina, please.
Yeah, if I may add, so what we did a year ago, we made bold statements that all sustainable finance projects, we are giving 50 bips discount, just in comparison to like any regular investment loan. So, but now since we have incorporated ESG scoring model in our credit risk assessment process, this is what you spotted. So automatically, if you see that the company is having, it is bad or weak on ESG risk management, so for sure there's higher credit risk, so effectively it leads to higher pricing. So, and then it is in the hands of SME to manage their ESG risk procedures.
That's a really good question. Thank you for whoever asked that. Did you want to come back, Matthias? Or you? No? Okay, great. We've got one, I think will have to be our final question now, because we're heading towards the end. Back onto do no significant harm, very much hot topic. So is there any opportunity to define types of goals where it is obvious the green goal and therefore no need to do no significant harm? It's a bit of shorthand there, but I think we can understand the meaning. So and obviously it's a green project.
No, at least on my side, absolutely, and this is exactly what we have done in the document you will see for consultation. There are areas where we just explain what is the type of measure, for instance, individual renovations of buildings, and we don't put any criteria for this, any DNSH criteria, because per se the measure is either has a low impact or we consider that existing legislation is sufficient to guarantee DNSH compliance. So absolutely, we still put it in those annexes where you have all the activities, because it allows all member states and beneficiaries to just get this guarantee publicly, like it's this guarantee that it is always DNSH compliant as per our guidance. Yeah.
Okay, thank you. And then there's one final question which has just appeared on the screen. I don't know if Mateus or Lina or Marek want to try. What are the practical tools used by financial intermediaries to verify do no significant harm at final recipients level? Checklists?
Yeah, so as a Rabobank, we act as financial intermediary in an IEB funding tranche under, I think, InvestEU program. And there's a very nice tooling, Green Gateway tooling, to assess alignment with the EU taxonomy. However, it's an SME tranche, and I think under 10 million ticket size, the do no significant harm is out of scope. So the tool is really good, but it actually pertains more on the sort of substantial contribution level, and do no significant harm is out of scope for that. So I cannot comment on the do no significant harm part. Yeah.
Marek, I think you want to make a comment?
Briefly, I haven't mentioned important element about our specificity. We have the group of ecological engineers who are helping our clients, and these engineers are located in regional branches. And for over 10 years, we have own internal rules for eligibility checker. So for us, it's quite easy to verify DNSH rule, because we have experts who can deal it. Plus, we can the guidelines I mentioned before. But one more thing, because I know we are running out of time, but I would like to very strongly support the voice from colleague from Czech Republic. We are facing very similar problems, because some of the loans are very small and are taken by micro companies. And for the maybe future discussion, we really like the combined instruments. This we were talking about quite recently. But what is the challenge right now? We are facing, not only us, problem with using combined instruments when there's in one operation energy efficiency investments, thermalization of walls, modernization of lights, and energy storages. It's a problem of state aid rules plus rules described by the managing authority. So I think it would be good to discuss in more details in one of the next events of FI Campus. Thank you.
Great, thank you. That brings us to the end of the session. So thank you all very much, panelists. You've all made amazing contributions. It's been really useful, really interesting. Some very pertinent topics have been discussed. So if you'd all like to join me, please, in thanking our panelists. And thanks very much to you. So just to give a little recap on what's going to happen next. So we have a 10-minute technical break to allow the room just to have some small adjustments. And then we have the closing session. So Jonathan and Frank will give their key takeaways. And we will also have the awards of the FI Olympics. So the medals will be given out. And then after that, we have some much needed lunch. So I hope you can stick around for those final sessions. Thank you very much.
Ladies and gentlemen, can I please ask you to take a seat? We need to finish up so that we can let you get back out again to eat. And we will try not to take too much of your time because we know that this is way past your lunchtime. Some of us are eating already, I see. Even one of my colleagues. Terrible. Yeah, well, I can't comment on DG Regio's.
I can.
Yeah. Right, ladies and gentlemen, first of all, congratulations to you all for still being here at this time on the third day. I'm always amazed that we managed to last this long, but hopefully you have found it interesting and that you've learned a few things. You've talked to fellow practitioners, you've got some inspiration, and you're willing to go back to your respective hometowns and lobby with your politicians and shout at your financial intermediaries and do more financial instruments. But before we do that, Jonathan, some reflections on the last 3 days. What have you seen or heard?
Thank you, Frank. I'd like to do a analog Slido. Could you put up your hand if you are completely exhausted? I was hoping we'd have a few more than that. We clearly haven't been working you hard enough. Reflections. This hasn't really been a traditional fee campus. A traditional fee campus is where we have lots of very technical presentations on the CPR and discussions and or explaining audit methodologies and getting into a lot of detail. This time we've sort of focused the discussion, the main discussions on SMEs and green on the first day and yesterday morning. And then yesterday afternoon we took you into a place which is possibly a little bit outside your comfort zone, possibly a little bit outside my comfort zone, because we actually sort of started to think about the structure post-2027, which we thought it was important that we expose this to you now because this afternoon the European Council starts and they will be, as I said at the beginning, they'll be selecting the political leadership of the Union for the next 5 years. So they won't wait for us in making decisions, so we need to provide our input straight away. So yesterday afternoon was designed to expose you a little bit to what the future might look like, and get some feedback. And we've just had a session upstairs, which has, via Slido, provided some feedback. But in terms of this sort of what does a performance-based payment regime in the future mean? We are still working on this. It's by no means a finished product, but I mean, this is the most valuable time at which you can provide your input. And the way I would summarize your input is what you want is to build on the past. You don't want to throw everything away and start again. I feel that there is a desire to keep some sort of multi-level governance, a sort of cascade system where you have actors at various levels, European, national, regional, local, to maintain the sort of the connection with the citizens, and some of you said with the market. And there were then there seems to be a little bit of interest in having certain types of activity, certain types of sectors which would really, you'd have to employ a financial instrument, either purely or in combination with grant. And upstairs, the clear winner there was the SME sector. And so we take that on board. So they were the sort of wishes, and then I heard some concerns as well. Firstly, I mean, the fear that we're going to lose the local and the regional element. Secondly, there seems to be a concern that we come up with lots of targets and milestones that are completely unrelated to financial instruments, and you didn't seem to like that idea, and we take that on board. There seems to be an idea, and I think we need to develop this a little bit, that performance does not equal impact, and that this is a bit philosophical, and so I think we'll need to, when our energy levels are a bit higher, we need to have a think about that. There was an interesting discussion yesterday about leverage and whether leverage could be a milestone or not, and there was some very divided views. I mean, this tends to be a little, this FI campus tends to be a little bit sort of peace and love, hippie, everybody loves everything and everything's wonderful. But yesterday afternoon on leverage, there was some significant disagreement about whether that was a credible target or not. And finally, there's a doubt about whether we know whether the RRF model has worked yet, and it's too early to judge. And should we be jumping into a new programming period with something that is unaudited, unevaluated? I mean, there have been audits, there have been evaluations, but it's something that's a bit of an unknown. But on the basis of this, we challenged you, you've responded, so thank you very much indeed. Thank you very much indeed for your ideas and your enthusiasm. Other things I take out of it was state aid is something that worries all of you.
Round of applause for state aid.
You understand that you can have simplicity or you can have flexibility, but it's very, very difficult to have both. And so we look for your guidance on where to go on that particular spectrum. And finally, a couple of points. And I was very impressed by the voting for the showcase, as ever. All three winners really affected the lives of citizens. They weren't just sort of monolithic financial things. There was a real impact in the lives of people in Europe, in the Union, which was delivered through financial instruments. And I think that the showcase winners can be proud of that, and I think we can all collectively be proud that we are having an impact on the lives of citizens. Some of them very vulnerable, but we are making people's lives better on the ground in Europe. And finally, we had a privilege this year of having Commissioner Ferreira and President Calvino. I don't think any of you know just how much effort the EIB and Regio put in to make this happen. And first we thought we had one of them, then the other one, then back to the first one. But in the end, we managed to deliver, and I think it was a really inspiring conversation between the two of them, which I think was a very interesting and revealing discussion about cohesion policy. And I'd like to quote your president, Frank, finally, who basically sort of said, and I think she was referring to financial instruments, it's not only the right thing to do, it's smarter. And I think we can all sign up to that. So thank you very much indeed for participating. Thank you for staying. It's been great. Thank you to your team, Frank. I won't name them as usual because I'll always forget somebody. And thank you to my team as well, and I won't name them either because I'll forget somebody as well. So many thanks to all of you, and now we have something a bit different.
Indeed. So, as we have been saying over the last few days, we started life as Phi Campus. We then grew into Phi Campus, and now, of course, this year we have Phi Olympics. Wow, what gave it away? Was it maybe the medals? Jonathan, will you join me here? So, indeed, the juries have been out. We've been studying the results overnight, spending a lot of time recalculating, calculating. But finally, the moment has arrived, and I do hope that those of you that have won are still here. If not, we will keep your medal for you, safe and sound. But to start things off, the idea was that we were going to present 3 prizes, as you would expect in Olympics and Olympics. But surprisingly enough, we have actually 2 bronze winners, which is very unusual, and we hadn't prepared for this, and I'm not sure we're going to have enough medals to give out. So, in 3rd place, jointly. Fantastic. We have, result please, Team 9 and Team 20. I hope you remember who you are. Please come up and get your medals. That means all of you, not your representative. So please come up here, stand along here, and we will hand out the medals as you would expect. If you go down to the end, please. Down to the end. Just line up along here, and we will... My gosh, there's a lot of you still here. Perfect.
Any more?
Any more? No, you need to line all the way along the front, please. Toes in the front. So we can put the medals around your neck. Come here, please. Come. No, here, stay on, but don't stand behind each other. We stand behind later for the photos. You, come here. And please. My God, this is difficult. It's easier to do financial instruments. All right. You all have to put your toes on the front. Toes on the front, please. Thank you very much. Right. I think let's get somebody else to do this next time. If I can ask you guys now, and listen carefully, to move towards the back, left corner. Just don't fall over the back, but over there in the corner, please, because we're going to call up the next award. Jonathan?
Okay, I'll try to make this tense. With 17 points, the team winning silver medals is BCER champions, Team 12. Please come up.
Congratulations. And silver, please move us also towards the back. Luckily enough, there's not that many of you left, actually. So we should be able to get everybody in. And just to say that we'll be issuing some fee compass guidance on how the Olympics will be run next year, so that we don't need to go through this process. Too difficult. So the moment we've been waiting for. Gold award. I haven't said it yet. So the winner of Phi Olympics 2024 gold medal goes to lucky number. Way! Boy, were you lucky. Lucky number, please come up. So, you know the drill. Walk towards Jonathan. Stay in the front, don't be shy. So we'll take a quick photo of the gold team together. Just stay in the front together, don't move. Okay. And now, of course, we will take a photo with all the winners, please. So you can come a bit more to the front. Jonathan and I will stand in the middle on the lower podium. Please come forward. It's chocolate. You can don't eat it now. You're in live camera. Come forward a bit, please. Ça va? Go to the back. More forward. The one to the back. Come on forward. Well done. And congratulations to Lucky Number. You're definitely the nerds of financial instruments. You've managed to answer many questions correctly. So, we're almost at the end. So the lunch is waiting, getting cold. So we'll quickly wrap things up. I also just wanted to thank especially all of you again for coming, for participating. Congratulations to our winners, both from yesterday and today. You know what to do next year. Start studying, get ready, make your videos, and start submitting. So I just wanted to thank as well colleagues on my side in particular who have put a lot of effort into preparing for this. I think most of you don't realize how much effort actually goes in the background. So just to thank. Don't switch me off. This is an important moment. I want to thank especially Emily, Des, Anna. A lot of work has gone into preparing for this. It's not just you, clearly, but I think a lot of effort has been putting in, particularly to moderate as well the sessions. Olivia, of course. But I do want to actually call up two ladies on stage. You know who you are. Chiara and Katerina, please come up, because I have to say, these two ladies do a remarkable job. Nobody notices it, and this is your time to shine. Well done. Congratulations. Come. And indeed, as Jonathan was saying,
with our president and commissioner yesterday, this was a nail-biting experience, I have to say. But without these two ladies here, it wouldn't have happened, actually. They probably would have been meeting somewhere in another hotel, I guess, having a separate conversation. So congratulations to you, and thank you very much for all the organization. Thank you much for the team in the background, all the consultants that are working with us. And lastly, to celebrate a work of art of my colleague Chiara and some of the video team, we put together a small collage of the last few days, as we traditionally do. Just to say before we play that obviously all the material from the last couple of days will be on the website. We obviously did actually live stream, and that is obviously available on YouTube. You can go and watch that as well. Pick out your favorite moments, including the award prizes, for example, from yesterday. I also would like to ask you to fill in the feedback forms. We really do need your feedback, particularly on new ideas that you have, things that you would like us to do more of or less of, because we do need to move along. I think the last couple of days have demonstrated that we are in changing times. We need to evolve and we need to prepare for the next period. And the more we can do to help you on the FI Campus to go in that direction, the better everything is, of course. So that's it from us. We will play the video, and after that, you may go and eat your well-deserved lunch, have a good return back to your respective home countries, and we'll see you next year for the 10th anniversary of FI Campus. Thank you.
FI Campus, apart from my holidays, is one of the favourite weeks of my year. It's a wonderful opportunity to meet people who are putting financial instruments into practice, and above all, to hear from them, to hear what they can't do, what they don't think they can do, what they don't understand, and we can take that on board and help them to make financial instruments successful on the ground across Europe.
Financial instruments is a good way to use public funding. They are revolving, so you have public money going out there and working for you in the society. So you need public funding sometimes to bear the risk. But after it has done its thing out there, it revolves and goes back. So from a taxpayer's perspective, it is a good way to use money compared to grants, which is one-way ticket out. This event gives me inspiration. I like being here. This is the second time. I was here at the FI Campus in 2023 as well. And this year I feel more of the community building.
So FI Campus, I like it very much because it's different every year, and it gives us the energy, and at least to me, the energy to continue my work for the next year. End of 2022, the level of implementation was quite good, so we are hoping to have a full implementation by closure. And for the new programming period, we have the planning, which is at around 18 billion euros. We are quite happy, mainly because the allocations for energy efficiency doubled compared to the programming period 14-20. And also the allocations for SMEs and innovation is quite significant.
There's going to be an ever-increasing need for investment because of all these new priorities and these new challenges that Europe is facing. At the same time, we know that there's going to be less public funding available. So that means there's an obvious role for EIB and EIB Group to play in bridging that gap. Clearly, we will not be able to do it with our own funding. So our other role, of course, is to mobilize and bring in private investors. And I would dare to say that we are relatively good at that, and therefore, for sure, we will have a key role in this going forward.
financial instruments are the vital elements of the support of micro, small and medium enterprises. When we implement financial instruments, we can do more with less, meaning that with the same amount of allocation, we can have a greater impact on the economy, we can have a greater impact on the SMEs than in comparison, for example, to the grants.
The funds we receive through the financial instruments really help us kickstart the overall funding of the company. It was really the snowball effects. So we first received 55,000 that helped us receive other funds from other actors. We are now 20 employees and we have helped 200 SMEs across France with their carbon emission calculation and reduction plan. This event is really interesting for us as SME to understand better the ecosystem, all the actors being there, all the instruments that exist. It was really eye-opening for us.
If it wasn't for cohesion policy, there would have been a massive fragmentation. Let's just think of what would have happened if the funds, the 23 billion that were reprogrammed, were not reprogrammed, and what kind of collapse there would have been in the European society, in the European health, in the European economy, in the follow-up of COVID. Just for that. But of course, the purpose of the policy is long-term development, and it has worked.
When I look back to what we have done in the last 5-6 years, I very much agree with Commissioner Ferreira. The response to the pandemic by the European Union was the right one. We managed to protect our economy, but also to protect our social infrastructures, and that was thanks to cohesion funds being repurposed. Of course, the new instruments like the SURE mechanism to protect jobs through short-term work schemes, and the Recovery and Resilience Facility, which is also a great success. So sometimes, we're very timid when we're talking about our own strengths in Europe. This time around, I think we got it right, and going forward, we should learn this lesson.
Just presented a showcase award to the Slovak Investment Holding for their affordable housing project. This is a brilliant project that provides affordable housing to vulnerable groups. Groups such as people with alcohol problems, people who have suffered domestic violence, and also Roma people who are subject to horrible discrimination in many parts of the EU. This is really cohesion policy working on the ground, but working through financial instruments which provide more sustainable solutions to problems that citizens face in their daily lives.
It is this network of people that makes Europe, and that makes so many people outside be dying literally now in the attempt to join us, in the attempt to be part of this community. And I think we are an inspiration, and I hope we keep being an inspiration to make the world a little bit better.